All right. Ladies and gentlemen, welcome to the stream. Hope you guys are doing well. What's going on, fam? It's Wednesday midweek. We have some really good setups today. We found our new way. We decided to go for gold, GJ, maybe an indice, maybe oil, maybe another pair, but our focus is gold and GJ here. And we're seeing right now a lot of potential. Looking forward to host you today. All right, welcome to the stream. What's going on? Let's see what we have here. Tamim. Perfect timing, brother. Welcome. Tranka, welcome. Ati, Tamin, Asolak, Anas, Sam, Donald. What's up, man? Prem, Jack and Rusher. Romo, Keith, Sorak, yes. Amazing, guys. Welcome to the session. So from now on, we started around this time here, right? We start opening up at 6:45 New York EST, and we close at a couple hours, like 4 hours a day. Depends on the market, of course. At the same time, our actual stream usually starts at around 7, but I assume a little bit earlier sometimes as well, depending on the market. Depending if actually we're already seeing a breakout or something in that manner. Can happen at any given moment. So in this case right here, we have gold. We have GJ here. Something very interesting about GJ. I talked about it yesterday, which is gonna actually play out very, very soon. Is already actually playing out here, which is fantastic. We have some oil as well here, and the indices are later. Okay, the indices we need to wait a little bit longer here. Not enough volume yet for indices here to become to make it interesting enough here. Okay, so for gold today, there is a interesting setup for sure. I'm looking for buys above the 1939, so 1939 buys, closure, buys. Depending on what time we close, we need to look at what time frame. Could be the 30 minute, could be the 1 hour. It totally depends here. Okay, but at the same time, I think it's important to mention that there is a lot of potential to the upside, in my opinion, for gold. And the reason why is simply because if you look at the overall market structure right now, you see clearly that this is the high, this is the low. This high was a really decent expansion. We have created a higher high here. We pushed up. We had a body closure above this candle as well, which is a wick body closure right there above that wick or around this wick here, which is the previous high. So the body closure is actually higher than this overall range. We came down. At the same time we came down, we're now holding above this particular low. So far, this should indicate that we are facing a stronger low. So if we then break the internal structures of that stronger low, that means that we have a successful bounce from that stronger low. Therefore, if you wait for a body closure, we have an actual body above it, which is directly a bounce from an area of demand. At the same time, if you break above it, you break above this horizontal support right here. You can come up to fill up that imbalance. There's not much happening in between. At the same time, we failed to break any of these previous highs as well beforehand. So there are a lot of orders placed above here as well, which is a fantastic target, a long-term, medium, long-term target to look at as well here. So that's why when I'm looking at 90.38, 90.39, break, closure, at least take it to the 90.45. If not, higher if that's the scenario here. Why? Dollar is looking weaker. Okay, if you look at the 12-hour chart or the daily here, we have been coming up, we have been pushing up, but we're looking exhausted already. We're getting pushed down here. We're getting rejected right now of this overall range. We have seen already that we're facing that resistance here overall. Right now getting pushed back. At the same time, the way we have been coming up is also not really perfect. We're starting to lose a lot of strength here. This is not how you want to come up and actually, recover from the dollar here. You want to break significant highs. You want to see much more volume coming in to break these highs. Then put in the low. But in this space, you're going to come down again. And if we're going to come down again with the dollar, it only will make gold stronger than it already is. Even though it may not be looking that strong at the moment, you will see that when the dollar will come down here, that this will only be beneficial for gold. And therefore, we're going to see a great move happening here. At the same time, another layer, simple confluence right here is just that trend. You see clearly that we have been breaking and holding resistance below. The moment we came above it, we started above it, we came below, now facing resistance again. So if you break above it as well, many confluences are coming together here. So that's the reason for our buy here for gold. If we do break the low though, then we have to really break below the 1924. And that's an whole other scenario. So we then have to see what's happening from there. But that's a whole other reason, okay, for our potential gold here. I'm like 70-30 today long. If we have to go short, that's a whole other reason. And we'll find a way to go short here, okay? Then for GJ, we have been talking about that right here, okay? We had this consolidation at expansion. If we didn't have enough volume, then we were going to come up. We came up to the point of control. We saw that perfect rejection on the dot. Couldn't be better. And we came down here. When we were here, I was like, yes, I want to take a short. I got distracted. This is my own personal mistake. I got distracted myself. And therefore, I missed out on that trade here already, which is actually a fantastic trade. The moment you break this, after that rejection of the point of control, I made a video about it on my channel as well. It's uploaded a week ago, where I talk about the fixed short profile and how powerful it is and how you can then act and take a position. I missed out myself. So what I'm looking for right now is to just either break below this level again, which is the 179.9, which is a bigger overall range if you look on the higher time frame, or a pullback towards the 180.8 and then see from there. Something in that matter. Okay, that's DJ. And I think there is definitely some potential. And I see when the market opens up here soon, the volume coming in. And I think this is only going to be good for gold here. All right. Hope you guys liked the introduction. Time to be a little bit more patient here. And for the rest, have you seen Bitcoin, guys? It's absolutely going nuts. We took a position here on Bitcoin as well. I could talk about it a little bit more. But we have our private live stream coming up here on a Friday. That is a mastermind full of highly motivated traders. We have been crushing it together here. Okay, over and over again. Right now, Bitcoin is changing. Like I said already beforehand, time is coming. We're coming closer and closer to something bigger. And it's coming close. It's coming close, okay? So pay very close attention to that. People are questioning it right now. I want to make sure that you guys are doing too. So you want to be part of that live stream on a Friday, a little bit later on a Friday. You want to be part of it because it's super important for you to understand that crypto is the next big thing. And I believe it and I see it. And there are so many confluences coming together right now. So do also take that in consideration while we're trading gold, while we're trading GJ, while we're trading the regular stuff as well. Of course. Of course. Bro, you see what the status explain anything by possibility. Well, first of all, let's smash that like button here today. Let's break some records. Let's keep going with our momentum here. This is the beautiful thing. Especially if we have been winning. Want to keep our momentum up here. And I think we have found something very nice to do so. So let's get it going. Hi Lorenzo, I have a Trust Wallet account. Should I buy Bitcoin? Right now, I think you missed out on the move. I think there is a chance we can come back down a little bit. But the moment we can come back down, we might be able to do so. I do think so, yeah. But not yet. Not yet anymore. We have to wait for a pullback right now. Okay, as you guys know, I'm doing the Prop Firm Challenge as well. For you guys, it's just for you guys. I'm trying to do the same thing. So I'm actually trading also at the same time from an MT5 account. And not just my own account. So you guys can track the progress right here. I'm going to do that live. Making sure that I pass the challenge live on stream. Nothing better than doing things live. There's just nothing better than that. All right. It's the most challenging yet the most enjoyable. And I like to put all the pressure in the world on myself because I know I can handle it. And we can crush it together. So. Still rocking it from Bali, Indonesia. Let me know where you guys are from here. I've seen people from all over the world, but sometimes I see a lot of people from Europe, especially. A lot of people from Europe here. Let's see, South Sudan, Johannesburg, Afghanistan, Belgium, UK, Scotland, Rotterdam, my city. Berlin. I've never been in Berlin, unfortunately. Spain, Warsaw, Jakarta. I've been in Jakarta many times. What platform do you use to trade crypto? BitGet. Singapore. I love Singapore. Singapore is amazing. One of the safest places in the world. It's what is it? Is it a country? Is it a state? It's actually an international state or something that matter. It's fantastic. I love it. Scotland, Portugal. I've been in Portugal. Ethiopia. I've never been in Ethiopia. Sydney. I've been in Sydney. Morocco. I've never been in Morocco, unfortunately. I would love to be there. Love to go there as well. Romania, I've never been in Romania. Slovenia, I've never been. Poland, I've been. Been in Krakow. India. Man, there are so many places we have to go. There's so much on our list. So, oh man. So much on our list. Brabant. Nice. The moon. We're going to the moon though. We are going to the moon, that's for sure. Rwanda, Egypt, Italia. Norway is the most nice country. I believe that. I do believe. I'm a big fan of Scandinavia in general. And the nature and everything. I'm a big fan. I'm a big fan. That's my dream, man. To to live in Bali, have something here. To live in Dubai, have something there. To live in Scandinavia, up in the forest, and have my little what is it? Like a little house there, a little wooden house. In the winter. Summer at the lake, you name it. Visit Rwanda. I want a couple things, a couple places I want to go to in Africa as well. Congo is one of them. Rwanda, I've never been. Have you been? Where were you again? Kenya, right? Ethiopia, yeah. Where can we do auto backtest of the strategy I made for MT5? There are a couple things that you can try with made in. I think the meta. What is it? The meta quotes. You can try it out there. The Hustler, welcome. Thank you for the sub. Hope you're doing well, my friend. South Sudan. It's pretty much all over the world. So yeah, we're waiting for the volume to kick in. I just truly believe that the moment we break this high here, it will happen quite quickly, especially if we have a body closure above the 1938, 1939 on the 30-minute or 1 hour. I think it's going to be... I think there is a big chance we're going to look for the continuation here. David says, my family lives in Waterford Ferry Bank. Where's that? I'm thinking of shifting to Jupiter, but I want to go together. Well, I was thinking about the moon first. I would love to go to the moon. I DM'd you on Instagram. Please check. Okay, later. I'll check it out. Thank you, bro. Deepan. Kumar, hope you're doing well. So oil made at a significant low. It was a significant rejection after we took out the high. So you know how it goes. Pretty standard opening. Looking for continuation here. That's one layer. Japanese yen is looking good. Cannot lie. Japanese yen has been coming up, coming down, coming up. It looks very solid. So this is only better for this will not be good for GJ, which is good for us. I mean, it doesn't matter. We look for the continuation here to the downside for GJ, and I think there is a lot of continuation potential to the downside as well. Look at the way we're coming down after we coming into the monthly area of resistance here. We have been tapping into this area already, this high. The monthly candle closure is in 9 days, which is a week away. But at the same time, you can already see that on the daily we're starting to slow down here. Yet we need to break and close below the 179.9. In my opinion, to look for the continuation, which could happen on the 1 hour, for example. We need to see here, but we need to close below, and we need to have a body closure below this level here before us to make it interesting enough to enter a second position or give us another potential re-entry possibility. Let's put it this way. If gold goes up, does the US dollar goes up as well? Well, usually it is the opposite. So if gold goes up, dollar should come down here. And the dollar is not looking that particularly strong. The way we're coming up here is not for a massive expansion. There is not much news coming. We have Jerome Powell testifying here. But in the end, that's just going to be another regular Q&A that's pre-rehearsed, which is not going to be that exciting. So I do not expect too much volatility around that statement. It's nothing compared to the FOMC and all of that stuff. You might see a little bit of volume, but I do not expect too much of volume here coming in. Are you looking for buy or sells in gold? For now, I'm looking for buys. There's just too many confluences coming together here. Too many things that we will have to break in order for us to actually look for sells. I think buys have much more possibility now, but you never know. So I give it like a 70-30% buys against sells here. So let me know what you guys are looking for. Are you looking for buys or are you looking for sells? Let's see who's going to win. Who's going to take. If it sells though, then 1924 is the level to break. That's for sure. You need to break the lows that put in the high. Gold buy, GJ sell. Okay. Depends on closure, fill in the liquidity. If the news tells us that it goes up and down, yeah. Okay. What's the most volatile USD? It depends if you trade minor pairs or major pairs only. I've seen the US dollar, Canadian dollar being pretty vulnerable or volatile lately. Okay, let's see. Let's place a poll here. Gold buy or sells? Community-based opinion. Let's see. Buy, sell. Please let me know in the chat, in the poll right now. I do not really care if it's down or up. I am more leaning towards buys though, but that's my personal opinion. Don't take my opinion for granted, because you never know. Because we have to break above the 1939. So let's see what you guys are saying here. And if it sells, we need to look at the daily. And then it comes down towards the following, which is the... Yeah, the 1924. The 1924. For ultimate confirmation. Maybe we can tune in at like 1920, 1927 if we do see a body closure already below. If that's the case here. Overall, I do believe that 1939 is I'm still leaning towards the probability here. Let's see what the community says here. We have 111 votes so far. 77% says buy, 23% says sell. What if it kisses 1940 and drops? So that's what I'm personally I'm looking at. So you need to see a body closure first of all. Okay. The second thing that you want to see, and this is a great example. I missed this trade. Unfortunately, I really missed it. It happens sometimes that I got distracted. I was looking at the chart 5 minutes before, and then it broke down. But like, let's say here, okay, this is just an example for gold. This is GJ, but like, take this as an example. So we are here. We break the low. Okay, and we close this candle right there. All right. So we break the low, we close that candle right there. What happens at the next candle? What you want to see is you want to see a candle structure that looks like this pretty much. Let me see if I can just draw it like this. Like this, for example, right? So, oh wait, 1 second. There we go. So let's say, you know, what you want to see, that's super important, is you want to see... Oh, never mind. I need that tool. Anyways, you want to see it coming up with a new candle. You have that closure. You want to come up first. Why? Because you want to see if there is still selling pressure. So what you want to do is you want to create a top wick. The way you create a top wick is by coming up to then come down, right? And what happened? This is exactly, I think, what happened here. We came up and then we came down. Okay. So in this case, I think I can go back to this candle one more time. Right here. You break it. That's one. Okay. Next candle comes up, comes down. What happens first? You open right at that level here. Okay. And that's important. You open up, you come up first. You create a little top wick. Doesn't have to be a massive wick. And then you come below that particular body. Okay. Then you look for a short. Right there. That's where you place your entry. The moment it breaks it, and your stop loss goes above the previous candle. Whatever your target is, your target. But that's where we go. And the moment it comes down and it breaks another low on the left, let's say, that's the moment where you put your stop loss on break even and hit your first TP. That's what we're going to do for gold as well, if that's the case here. Okay? If that's hourly closure, you wait for that thing, come up, and then come down. What do? You reduce 75% of your fake outs right there. I have a video about it, how to avoid fake outs. You can find it on my channel as well. I uploaded like a couple days ago. And then you also have another one. Cross the markets with these candlestick confirmations. If you combine both of these videos together, you get a very good understanding of what I'm doing here, how I enter, and when and how I manage my trade. Do I still get faked out sometimes or swiped? Yes. It happens to the best of us. But you can reduce it tremendously with a pretty simple but effective strategy here. So that's the way we look at the, let's say GJ, gold, anything in that manner here. Okay. So that happens when you have a closure and you come down a little bit too much. If we would come down and break the low and we close the 1 hourly candle here straight away, you just enter market order. That's it, right? You wait for the new candle, come down, market order here. It just depends where the candle closes and where the next candle is created if you wait for that candle closure. Yeah, on the daily, indeed, we're seeing this happening as well. Keep in mind on the daily that when you see this, that if you see the hourly, and this is important for the Japanese yen basket, so you want to make sure that the yen right now breaks above this high. And I think there is a slight chance we would push back a little bit before we make that move here. So that's why I think the hourly is just a little bit like more clean now to take in consideration. Okay. So yeah, if we come up with gold here, okay, and we create that structure, we come up, we close right there, okay, we come down, we create a top wick, and we then come up again, and then this body covers this body, like I explained in this video. Then we enter, place a stop loss under that last wick, and we take it to the highs here. I think 1945 is a great first target. Actually, it's not 1945, it is 1946. You can take some profits earlier, of course, but series target 1946, 1949, and then we'll see from there if we do decide to come up here and break this particular high here. If you break the low, we have to look at two levels, which is 1927 and 1924. Why do you trade for 1 hour closure instead of 50 minute, 30 minute? It depends on what time we break it. So if we break it, let's say 1927. Let's say we will break it right now, okay? As a theory. Then of course you're going to wait for a 30-minute candle closure. If you break it 10 minutes before the 1 hour candle closure, you're going to wait for the 1 hour candle closure. So it just depends on which particular time you break that level. In this case, it will be probably then the 30 minute if you break it right now. And that's the reason why. Another reason is that I have actually created another tool for you guys as well, which is right here. This is the spreadsheet. Let me see where the spreadsheet is. There we go. There we go. I created a spreadsheet with these closures as well. And you can literally see it literally at what time you break, at what particular closure you want to look for. So then 1928, 30 minute. And you can literally look it up here and just see from there. Yeah, dollar right now. Yeah, this is not looking that particularly strong. Even though you're coming up here, you're not coming up with the volume you wanted to come up here. And if the dollar comes down, it will only be more beneficial for gold. So if the dollar decides to break and close above here, right, and like a lot of volume comes in, we're going to see gold doing the opposite. But until that moment, I'm more leaning towards dollar pushing back and gold coming up. But yeah, we just have to wait and see here. Probably around the New York Open or something in that manner. Where are you at with the Funded Next challenge? We just started yesterday. I only took the trade yesterday live. That's my goal. Take as many live trades as possible. Try to avoid as many trades besides the live streams. That's the deal. That's the thing. That's the key. I just want to show you that it's possible to pass the challenge. Even though I'm not really into funded accounts or something that matter, but it's still fun and it's a great way for a beginner to medium advanced trader to learn. and to evolve and to practice without risking, unnecessary amounts of money from your own capital. And you don't even have to start with like a 200,000 or 100,000 account. You can also start with a small account and just say, okay, I try 10 of these accounts out, proper risk management. Once you feel you're ready, you don't have to spend a lot of money in order to do so. But it gives you all the information. So the complete dashboard, the trade history, everything that you need to know here. Why did you just fund it next? I'm testing it out. I'm not sure yet. I'm just literally testing it out here. But it has to do with a stellar. There is something about a stellar challenge. That means that you have a one phase challenge. Not two phases, one phase. Do you stream every day at a set time? So I'm aiming for 3 or 4 streams a week, same time. And then 1 crypto stream. Which is going to be on a Friday in crypto in Discord, because it's coming. I'm warning people. But sooner or later, you will see. Everyone will start talking about it again. Lorenzo, which trade copier is better? Social Trader Tool, Dupli, or CleverFX? So I used Social Trader Tools before, and it works flawlessly. It works very well. So I have no idea about the other ones. Lorenzo, are we going to look at the Canadian dollar today? I was not looking at it yet. I can look it for you now, real quick. I can look at the US dollar, Canadian dollar, just to check out what's happening here. But my main focus is definitely gold. It's definitely gold here. Okay. Yeah, still looking weak. Still looking weak, coming down, not looking strong at all, getting pushed down already during the open. Coming up, coming down, creating this double bottom here. Rejected at this area of demand. Supply, sorry. Coming down. I would look at look at the 132. Let's say look at the 132 level. Set an alert there. Might look for sales below if you break these highs at 132.69. Let's say 132.7. You can take it up to 132.185. So that's like a nice long potential. But below this level, I would still look for shorts. And based on what I see with the dollar right now, I think shorts are a little bit more likely. But you never know with the news, so do take that in consideration here. But there is still a long way to go before you can actually go long. Whereas if you break this low, there is some more potential to come down here. Yeah. Have you heard about Turkish bank? They plan to raise their interest rates rapidly due to the loss of the currency value in the last months. Well, yeah, it happens all over the world. Some countries are more aggressive than others. So yeah, be very careful, be very aware. What happens if the 1 hour candle goes above 180.422 for GJ? Like it's doing right now, okay? Didn't close, didn't came up here. 180.4. Yeah, I think we're gonna then retest the highs of let's say the 180.8. I think there is a possibility here, but at the same time, You know, the yen is getting pushed down right now, but at the same time, we're already very close towards this area of the month here. So I think that with a little bit of patience, we can easily start coming down again and try again. So I'm not that convinced that we're gonna come up really strong here. So this only confirms our level. The fact that we're bouncing exactly from this level right here, it's only an extra confirmation if you do decide to come and break below it. Trade ID dollar Swiss franc 4 hour looking super solid now, waiting for an entry signal and rejection. Okay. Which one would you rather trade? High impact news with dovish or hawkish, or in between London and New York session when trading gold? In between London and New York session when trading gold. For sure. Lorenzo, is your count evaluation or express? It's stellar. I think it's evaluation. I just need to test it out. Once it's done, so far so good. Once this is completed, I'm gonna show you guys all the data, all the details, all the data, all the trades, and then I'm gonna see how good it actually is, and if I would recommend it to other people as well. Why do you want to trade rather in between London and New York rather than high impact news? Because you never really know with news. 100% sure. So I think there is a lot of manipulation. It's more leaning towards the gambling side of things. More than usual. Let's put it this way. Where can I sell GJ in terms of SMC? Well, you create equal lows right now. So you have these equal lows here. Have a look at 181.16 if we decide to come up there. If not, have a look at 180.828, like the horizontal levels here as well. Same level. Same level right here. But I would love to see gold breaking above here and closing, and the dollar coming down, which it's not looking that strong right now, and just giving us that beautiful expansion to the upside. Today's stream. That would be amazing. And let's keep our track records clean. The last two streams we had two really solid gold trades. So let's continue our momentum right now. When do you think trading will be banned? I think trading will. It's hard to ban trading. I mean, it's hard to ban trading in certain markets as well. For example, look at DeFi, crypto, you could in theory already trade this. It's impossible to ban it. But don't you consider 5-minute market structure change in GJ for longs? So yeah, it looks very good. I do agree. However, look at where the Japanese yen basket right now is. And look at what we're doing here. So we're now in that zone. And let's see how we react here. We have this this closure soon. If you look on the 5-minute, I do believe that we are coming to that range. We could easily see a continuation. And keep in mind that I just want to look at the bigger picture right now, because we are up in a crucial high of a massive range. And I think that if you can catch a sell and you hold it at the right moment, the right time, it can turn into a really solid trade. What makes you to leave Blueberry? I'm still with Blueberry. Will we maybe look at possible oil trade today or tomorrow? There is potential for oil. And the reason why is because the selling pressure is real right now. That low that we've created is real right now. It's like a significant lower low. We have been breaking that structure. We have been coming up straight away. I just see us coming up one more time and then come down. So, you know, something like this will happen. And testing this actual high here. We have not properly tested that high here. I would love to see that high, then break this low. And then short this low, stop loss above it, and then target the lows here. And gold, yeah, I like what I see for gold. If you break the highs, it's it's a higher probability. If you do see it coming up and breaking above, because we have failed to break this low yet. Maybe we will later, but for now. This low took out this high. We're now back at that low. We're now building that liquidity to the upside. We have these horizontal levels here. We have that liquidity built here. And the dollar is starting to look a little bit weaker. So the only thing that we are waiting for right now is the volume. The volume in the market. And this could happen in a couple minutes, maybe 15 minutes. Let's see. All right, 323 votes, 72% says buy. Interesting. Chris says, caught GJ yesterday for a short, kept my stop at break even. It tried at liquidity push last night and dropped back down to 180.5. Looking good so far, still in the trade on a short. Amazing. Yeah, so again, we had the consolidation, we had the expansion, we had the retracement to the point of control, rejection, looking for the continuation. I do believe that there is a lot of potential. I just want to see that final squeeze here happening. Maybe push back down for the yen and then continue our way to the upside, or maybe we already come up here. But you know, this structure was a good high. This was a great high to break, to come down and come up again. So if we come up and we come down, the continuation or the reverse or the flip of GJ here would be useful for us, because then we can take a position from there. What is your longer term assessment of the S&P 500? I built a swing trade last week, but the dollar is looking a little bit weaker now, and I'm concerned that it will keep pushing the S&P up. Great question. However, I am respectfully still quite leaning towards the short side right now. And it also has to do not just with the dollar, but also with the speculation here. Look at the volatility index in general. Look at what the volatility index is doing right now. Which has a major impact on these particular indices right here as well. So this is serious expansion, and let's see how far we close this. But I'm leaning more towards the flip here, which I've been talking about already, like around 2 weeks, a week and a half, and I think we are coming closer to that flip here. Just waiting for the right expansion, for the right actual trade here. This also counts for the Nasdaq and for the US30 as well. I do believe that there is still a possibility that we can make that one more move to the upside before we make that move down. So, you know, something in that manner. So I'm waiting for that move to happen. That final squeeze before we make that actual move here. Reese, how are you? Look at the EU. There is going to be breakout at the upside. It's beautiful that you're talking about a breakout to the upside, because I think that there is a possibility, but I haven't seen EU yet. You need to break some serious highs in order to do so here. You need to break the 109.353 in order to get there. Because until that moment you have this air of supply here that's pushing price back further down. I think that there is we need to still be a little bit patient here. So wait until we break the 109.353. Gold buy or sell? It depends. It depends. If we break above the 9038.5 or 9039 and we close there, definitely buy. If you break below the 1927 or starting at 1927, coming down to the 1924, probably looking at sells from there. Go Gorgon, hello Lorenzo, good to see you. Are you ready for a good New York session today? Always, my friend, yes. With our new system coming into play here. Absolutely. When is the news? So we have only the Federal Reserve, or like Jerome Powell, let's say, speaking, testifying again. And the only thing that he's going to do is just, it's going to be a Q&A where they're going to sit on a table. They're going to ask him a bunch of questions. He formally answers all of these questions from a piece of paper. And that's it. So it's not like the FOMC meeting. It's similar, but it's not as relevant, to be honest. And I thought it was relevant. I watched all of them over the last, let's say a couple of months. That's 6, 7, 8 months ago. Until now. And absolutely no relevant explanation, and also no relevant expansions in the market when it happened. Could be different this time though. We don't know. But I do not expect too much here. As far as what I see on gold, I like what I see. Look at EU. Yeah, EU is just building liquidity on both sides here. So we have liquidity below, we're having it above here. We just like look at a serious normal breakout pattern. I don't know how you call it here. But in essence, when you look at the dollar itself, in my opinion, the dollar is not looking that good. So if you look here and you look at the dollar, is this looking strong to you guys? I'm not really into it. US dollar, Canadian dollar tends to break down. Yeah, I have an alert set below just to see how it goes and see what it is. But yeah, gold is moving. Gold is moving up a little bit. You see that we have been constantly fighting these highs here. Like we have been targeting these levels exactly. We have been constantly getting pushed back here. Okay, I don't know how many hours after that massive expansion, after that trade that we took from right here, okay, to the downside. You see right now that we try to push back up, but we're facing all that resistance here. And yeah, obviously there are a lot of, that's a lot of traction around that level. So that's why you want to break that level right now. Break and close above it. And then just look for the continuation to fill up that gap here. There's not much happening here. Okay. So a nice breakout to the upside will be fantastic to target at least a 9-45. Then you have this trend line. Again, that works like as follows, right? We started to come down. We broke below it, started to come down. Before that, we were here. So it's like another small confluence, not really that important. But, that horizontal level here is important, as well as that bounce from this low, which is a stronger low because we pushed that high, created that high. The external levels are quite relevant. Now we're pushing back. And I think after this accumulation, we just were looking for that one more expansion. Even if we are coming down, I want to see it coming down like this. Dollar is forming a clean dino pattern. We're coming down a little bit already. We're pushing a little bit right now. So we're seeing it happening here. GJ is pushing, it's getting pushed up a little bit right now as well. But again, indeed, the yen is holding here so far. So you see it happening right now. But yeah. When the gold goes up, the dollar goes down. It tends to be negatively correlated, yes. That's how we look at the confirmation as well from the dollar. And not just the gold chart itself. We also look at the continuation. The continuation and a correlation with the dollar as well. Hi there, Lorenzo. Hope you're doing fantastic. Thank you, Eruka. Hope you're doing well. Yes, amazing. Bitcoin long is doing well. Gold today in London wasn't fun, but we are on the daily lows and the resistance at 1938, 1939 is pretty strong. If we break out here, we will see 50 plus pips pushes, I believe. Yeah, I think that's important matter as well to take consideration. The fact that you have these lows here. A daily candle, the flip of the daily candle as well. So yeah, it's another layer. If they ban trading, how will the 5% make the money from the 95% of losing traders? I don't think they will. But if they do, then we will trade somewhere else. I think the volume will come in right now very, very soon. We have a minute and a half for the New York Open. Let's see how the market opens up and if the volume actually decides to enter the market right now. If you do, fantastic. I'll be doing great, thank you, man. Yes, fantastic. Did you buy, Lorenzo? No, we're waiting for buys above the 1939. And with a little bit of volume and a beautiful closure, it should be fine. Let's see. If you break below, then the 1927 till 1924 is interesting to look at. Is it a good idea to place a buy stop on 1939 before the news? You know what the thing is? I think it's something to take consideration. I think it's important to be patient. Because you're also looking at a daily flip of a daily candle as well. So if you would break, you would fill up that complete wick. And this is where all the selling pressure came from initially. So therefore, like an hourly closure or a 30-minute closure, depending on when we break it, could already help you with reducing the chance that that will be the case here. So yeah, I would suggest to wait for closure. But if you want to place a buy stop, it's up to you. It depends on your strategy. So far, so good. We look at the dollar right now and we look at gold here. What time is the news? The news is at 10, but I do believe that... yeah, let's find out how much volume we'll actually see happening beforehand. I do think that we should be able to see this before. Are you looking into DJ? Yeah, definitely. Absolutely. Someone says dollar is at monthly equilibrium plus inflation stalling at this level is bad sign for the dollar. Yeah, we always confirm it with the dollar. So if the dollar is doing this, indeed decides to stagnate already, like we talked before here, around this level, it is indeed not a good sign here. With the way we come up here, there is not enough volume. You know, there is not enough volume to break these highs for now. Unless we break and close like a 4-hour candle above here, I'll be more impressed. But until then, not really. We're seeing this high. That is a massive expansion. We saw that massive drop. Now we're coming down. It simply looks like we're looking for the continuation to the downside. All right, coming back to this bigger range here. So if that happens, you're going to see gold with a little bit of volume breaking, coming above here. If you do decide to come down and we close below, yeah, we'll see from there. Guys, what do you think, and this is important, about a new quiz again? I know we did that at the beginning of our streaming career, but we can do a quiz. And we can do some stuff here in regards to the... some nice giveaways and that type of stuff here. A little bit more interaction, okay? You have these live quizzes as well. Unhackable ones. I found one that you cannot cheat on. Okay. Which is important because there were a couple of these quizzes. We did it before. And apparently you could cheat on them. There was like a software that knew the answers and so on and so on already. No, an unhackable, uncheatable quiz that everyone can join while we're streaming to then, you know, see and ask you guys some questions. Trading related questions, of course. Can you make a course from scratch? Yeah, I'm going to do this. I'm going to post a couple of them on YouTube. You fancy catching some waves this weekend, Lorenzo? I might be in Uluwatu this weekend. But maybe soon. I will be back, yeah, Monday. Are you Dutch? Yes, I'm Dutch. However, I do not live in the Netherlands anymore. So yeah, dollar is not looking strong, but we need volume, right? Volume is king. We need volume now to execute. Otherwise, we're just gonna keep stagnating here. The longer we stagnate here, and the longer we stagnate in this fashion coming down, you know, the better, in my opinion, is to come up eventually. But again, the stagnation part is it's just a matter of time. The volume will come in. It should be coming in very soon here. I'm honest with you, I have no plan from the theory, but I know how the chart and trend works. Okay. Well, if it works for you, it works. And what matters the most. You know what really helps you become a better trader? Trading. That's what really helps you become a better trader. Trading. All right. The reason why is because if you just stay committed, and of course you need to have the right foundation and so on, right? You need to know the right strategy. Of course, all of that stuff is important. However, it's all about pattern recognition. So I was like, the more trades you take consciously, not unconsciously, consciously, like, you know, not impulsive, no. Really trying to nail down each trade you take and be very conscious about every trade you take. If you do many of them, your brain starts to see these type of patterns. So once you come back into the charts later on, you start recognizing things you've seen before. Candle structures, the way candles are moving, the way inducements are playing out, the way market structure works, the way you can find breakouts, the way you can anticipate on volume. All of these things are coming into play at that moment. The more trades, the stronger that consciousness becomes that you create. So theory is good. It's one layer. But execution is everything. And the more emotion, the better. Why? Because you lock that in. Because you truly care. And that's why trading takes time. How to know exactly when to enter perfectly, you know, when the market moves, when the candle is pushing price down or up. What is the right moment? You need to have a lot of, you know, trades in your database in order to get that. Can you speak or understand Afrikaans? Yes. Japanese yen basket is indeed holding here. This is gonna push. This is gonna push DJ down. Let me see where we at. I have to say, like, GJ right now is in an interesting place as well here. Let's see if we can find that candle closure here in 20 minutes above this level here. Hoe gaat het met jou, Lorenzo? Goed? Met jou? And recognize the manipulation? Yes. Lorenzo, you made me a lot of money. I'm forever grateful, brother. Thank you, bro. Happy. Let's continue the momentum here. Almost 100 test passes. Yes, we're coming there. We're going to start next week with our live trading in Discord. I'm very excited for it. Very, very excited for it. What EMA or SMA do you recommend to use in your strategy? 200 EMA on the higher time frame, on the daily, for like higher time frame setups. Did you catch the BTC move? Yeah. Entry at 26,742. Stop loss at 26,628. We're gonna go hard on Bitcoin very, very soon here. So in Discord. We have our stream coming up this Friday. We're gonna create an event for it. It's gonna come very, very soon here. That's what I do. I created a correlation cryptocurrency course. You can get it for free on Discord as well. You just have to get access to our VIP. In order to get access, you can click on this button. You fill in your UID. You get access to our group. There is a full course that I've created that you can look at. I have the mentor charts, and you can join the live stream, which is going to be on a Friday. And we're going to do things like this and talk about it as well. And just have a deep mastermind with a couple of guys in our community talking about the future and also trade setups if they occur or play out here. Check index. We can do it. We can do it. So if you guys want to join, by the way, go to crypto, join our Discord, come into the zone. Friday is our event. We're going to set it up right here. It's going to come. I have to create it. And I will not let you down here. It's going to be a massive event. In general, crypto is going to explode soon. I don't know if you guys are updated about everything that's happening right now, about BlackRock and everything. It's like there are some very interesting things happening. And these events do not occur that often. So... And we finally saw Bitcoin going up with a lot of volume. This is also important. A lot of volume came in. Is your crypto course free? Yes. Yeah. You need to be an affiliate of the Limitless Trading Academy. But that's it. If the Japanese yen basket closes bullish here, we might look at GJ here on the lower time frame already. But that all depends on the yen itself right now. Will you enter the trade even if it's low volatility? Well, I do not believe that we will see a body closure if it's low volatility. It has to be higher medium volatility in order to break it, because it's such a strong level. But if you do break it, we will have a high probability there. If you break the lows, yeah, we really need to see how we break the body below the 1927 here. And see from there. But I'm more happy. I would be more happy with the buys, to be honest. So let me change it up here. GJ looks good for sales. Yes, I agree. Let's see how we close here. How do you make money with giving our course for free? What about trading? What do you think I'm doing here, my man? Gold is totally priming for a big move. Beautiful. Alfano says, I'm ordering Ayam Bakar Sambal Mata for dinner. Nice. Yeah, give me 1 second, guys. While we're waiting for gold, I'm also curious what other people think about gold here. Let's see what we have here. Let's go to YouTube. We're waiting for gold here, regardless. Gold analysis today. Let's see if I find something. I don't usually do that. Let's see what other people are saying here. If it makes sense as well. Let's see what we have. Okay, let's see popular. Oh, wait. Upload date, relevance. Okay, now relevance. Let's see what other people are checking here. Purely analysis here.
Trades accordingly. So my dear friends, be careful with all your US dollar positions before the news because market may be extremely volatile. Your stop losses may not work. So beginners, try to avoid the market. Observe the market gain some.
Canadian dollar
will also work before the testimony, because right after testimony, if market shows extreme volatility, no level will work. Not on gold, not on dollar, nothing will work. Because whenever fundamentals will dominate the market, technicals will not work. Okay, so before testimony, you can expect 103 to 103.10 to work nicely. And the reason is that, see, if we look at the structure of the market is not very positive. And whenever market is coming down, you can see the market is, when the market is going down with big red candles, means
okay,
no need to exit from the trade. And during the day, if gold price to reach the second resistance on.
Okay, well, I don't really want to wait for that here. I'm curious for the reaction. First reaction I want to see is I want to break above here, close above here. Second one is the 1945. After that, we have to see here if we can. If for sure we need to take a majority of our profits. After that, either coming down, continuation to the downside. for gold here because of the dollar coming down towards this this particular low right here. Okay, we're talking about this particular low below, and also if you look on the 1 hour itself, this low is an important level at 102.39. I think that we could see some sort of bounce from there, but yeah, we have to find out too. If you already come down, we have to see what happens below the 1927, if not 1924. Nine more minutes till the 30-minute candle closure of the open. If you do decide to break below, and let's say we don't close below it, and we swipe the lows, then $19.32 is interesting. So yeah, let's see here.
On the chart of gold, 61.8% retracement level, 200 moving average, as well as good amount of price ejection. If we combine all the factors here, then yes, there is a good chance that these levels will work. Okay, so here you can see that
he thinks it's gonna go up.
You can expect 53.55 to work. 53 to 19.55. This is the second resistance on the chart of gold before the news. After news also, if you see that there is not much volatility in the market, then you can expect 53.55 to work. Okay, but yes, before news, obviously we can expect 53.
Interesting. I'm very curious to see. Gold is right now at this particular moment coming down. So let's see. Farm is coming in. Let's see what the Japanese yen is doing. Still holding there. Check 15-minute. Okay, yeah, we're definitely taking out all the lows right now at the moment. We have this 5-minute closure. So the 30-minute is the perfect candle to close here right now, because this will determine a lot here. You will see the volatility coming in here from now, I think. After the 5-minute candle closure, 30-minute candle closure, you will see that if you decide to immediately flip, it is actually very bullish. So if you now come down, at this particular moment, you close the 5-minute and the 30-minute, and you then immediately flip, and you break this this high of whatever 19.35. It's very, very bullish, because that means that we just swipe the lows to then reverse. However, if you decide to continue down, we have to look at it from a different angle here. Okay, but if you decide to come up, it's only gonna make it more bullish. Why? Because you have taken out the lows already. So if you truly want to bring price down, then you leave these lows open to take them out later on, right? Because you know you're going to come down anyways. So you then manipulate price, you come up, you swipe the highs, and then you reverse down. So yeah, 5-minute candle closure has been completed. Now wait for the 30-minute candle closure, and this is important. Let's see if their buyers are stepping in here. 4 minutes. $130 leverage enough for scalping? 100%. More than enough. I don't think more than 30, leverage is. I think 30 leverage is completely fine. Gold is melting, yes, for now. Okay, let's see how the dollar reacts here. We have this high. We're coming closer and closer to that high here. So let's see. We have now 2 more minutes left. Why are you not using the fixed warm profile on gold? There is nothing really to choose from to look at this particular moment. This was a nice range right here. And I think we came back to that zone. But it has to make sense. There has to be a range for it to do so, to use it. Okay, dollar is now here as well. Okay, you could see a reaction here for gold now. Let's see. 1 minute left. We tapped into that zone. Gold could push up here. A little bit on the lower time frame. There we go. Last minute before the 30-minute candle closure. Dollar. Gold. $30-minute candle closure here. Immediate dump. Immediate continuation down. There we go. Look at that. Double wick. We have been talking about it. It's on my channel here. We're talking about the double wick confirmation. Check this one here. Candlestick confirmations must know. What a push. What a push. Classic indeed. 5 minutes. $30-minute candle closures. Follow my. You should definitely watch this video if you want to know more about this candlestick confirmation here, We're talking and discussing these double wick confirmations. Right there. Oh, you cannot see it? Oh, you can. You can. Right there. Okay, but this is now we're like a little bit of a different approach here because we have now created new lows. Let's see how we evolve here. Sweep the lows, hit the stop losses, yes. So far, indeed, it's looking like we are getting pushed down straight away though. It's probably from the point of control of this internal range. So if you have to fix the zone profile here, you have a red line. It's a little bit higher. A little bit higher. It's the value area low. So great start so far. After the New York Open. Volatility is coming in here. We're still within that range. Any breakout of that range here will cause the overall direction of gold here. Same level, exact 1927. This is where we had that initial bounce from as well. I know he told us 100x. What's the name of the volume indicator? It's a fixed zone profile. Have a look at that video here. This video right there. Car culture just passed my 300k. Congratulations. It's always nice to see when somebody in the fam is getting funded here. Congratulations, friend. Shout out to him. Let's do hashtag car culture in the building. My man, congrats. Congrats. I'm always happy, man. Let's go. We need to be happy for somebody when they pass their challenges and actually get funded. It's a big deal. It's a big deal. Will you enter GJ? So far it's looking good. However, I'm waiting for the lows below the 179.927. I think a closure here coming up, continuation, closure below the bodies here, and look for the continuation, right? Consolidation, expansion, retracement, continuation. It will be perfect. Okay, we're getting in sell territory now. as we reached our first level here. I definitely want to wait for that closure now, that's for sure. And see if we can create that the next week and then continue down here. This will definitely tell us enough information, give us enough information for the remaining of this stream here. Yeah, we're starting. I think that that event will start in like an hour and a half, an hour and 20 minutes roughly. Where will be the first TP? It depends if you sell or buy. It depends. For now, you will see this is the moment of truth here. So this is like the last closure. Let's say we close below the 1927. Okay. We will have more significance, in my opinion, to the downside. If we close above it, we're still on the run to flip here. And just see this as like a big liquidity swipe before the actual event. You can already see it right now. So another level. Oh, thank you. So we have this, we have these internal levels right here, and we have these external levels right there. These internal levels right here are kind of the catalyst for a lead up towards these external levels. So let's say you have the 9035. There are potential buys already above it, same as potential sells below the 9027. It's just the difference is that the confirmation of the 9039, the 9024 are like the true actual confirmations here. Of course, when you close your body above here, you see also if you flip all the way, if you come and close above the 9040, it depends where you break out, where you close. The higher, the better. Yeah, Bitcoin absolutely smashed it here. Pretty nuts. Well, so far it seems that if we have this closure right here on the 1 hour, then I'm actually much more bullish. I'm just saying. Almost already at 500 likes right now. We're going to do the giveaway soon. Wow, that's quickly. Within 2 hours. Wow. What's happening? What's happening? What's happening? Around what time do you stream? 7 a.m. right now, New York time. So 7 a.m. EST, same time right now. Decided to stream an hour earlier than we usually did. We're almost at 100 people in our community. Amazing. In our not the community. In our V3 test. The people that accomplished the test. We have a verification test here. 52 questions. If you answer these questions right, at least you can have 10% wrong. Then you will be ranked, or you'll be given a new rank in Discord. And that rank allows you to vote with our trading setups. And these setups we take live on stream in Discord, besides the live streams on YouTube. And based on all these votes from these, traders, qualified traders, we will formulate and we use the data to make better trading decisions. And we make it very difficult. We step it up every time. This is the first test. We make it harder and harder every time. The second rank is proof of funds. So that you're verified, that you're a funded trader, that you have been profitable for so long, and so on and so on. And we improve that system. Keep in mind, if we close this candle here, we have, let's say a minute until the 15-minute closure, then 15 minutes until the 50-minute, 1 hour, 30-minute closure. A full hourly closure here. If we close above the 1927, I remain quite bullish. I think it's important for them to come back up to the 1946 before making that next leg to the downside. If they truly want to bring price down. But let's see. Of course, you can also take the 1974 low before going up. Yeah, so that depends on the body closure. Dollar getting a little bit wild right now. Okay, we're starting to get a little bit more volatile at the moment. Lorenzo, do you sometimes trade alongside the daily buys, or do you just predict where is manipulation and try to catch the reversal in the direction of the rest in liquidity? So, no, I usually I would like to prefer with this strategy specifically trade alongside the daily buys. But when you see something like this happening here and there is no confirmation, then of course we're looking to see if we can catch the reversal. Absolutely. Lorenzo, will you make these videos about the US dollar as the trick videos on gold? I could do that. I think there are a couple of videos right now already that apply very well. So the video is the only indicator you need is one layer. It's another strategy. How to avoid fake outs is one. The candlestick confirmation is another one. These two are very important. And then indeed the dollar confirmation, the correlations and stuff is another layer indeed. Chief says for gold, the password is 9031 on the daily. Its intentions to brings us to 9045 to 1959, which is the most important, and in the decline 1916 to 1902. So it's a very important number for us. Okay. Well, we're here right now. Dollar needs some liquidity to drive to 103.199. Yeah, so far we're getting that rejection here, and I think this is on like the lower time frame, like the 2, 3, or no, 1 minute, 2 minutes, and that's exactly what you wanted to see. So it takes out the lows, so it takes out the highs, manipulates the highs, it breaks above it, it taps into that high that creates this low. After that, you see that rejection of that high coming down. That combination of then gold swiping the lows, closing potentially, we'll have to find out. An indecisive candle closure, or indecisive candle bullish. Let's see. We have 10 more minutes left, so we don't know yet. But overall, that is a nice way of flipping, taking out the highs and then coming down further. So yeah, if the dollar decides to continue now, and come back to these lows here, gold will have to react to that. So therefore you have that 10 more minutes until that reaction. If you see the hourly right now, okay, and look at what the hourly does. So the hourly came up for the dollar. You came to these highs. Internally, you know where you got rejected from. But if you flip here, like this completely, man, that's not looking good. That is not looking good for the dollar here. So yeah. Let's see. 10 more minutes left for that closure. Hi Lorenzo, did you already choose a new broker? No, I'm still with BlueBerryMarkets, as you can see here. Still with BlueBerry and BlueBerryMarkets. If I trade, I'm at the trader here. BlueBerry is a very good broker. Yeah, that's the only reason why I have them in my description. Because I've actually tested them out properly. And BlueBerryMarkets not really yet. I need more trades. Oh man, look at the dollar getting pushed. There we go. Gold stagnating around this level. I have a feeling a lot of sell orders got activated at 1927. Below this level here. or sell stops in general here. Let's quickly check what the others are doing here. So we had oil. Oil is not there. It's still holding a buffer. I need to set an alert right there. 70.775. And the S&P 500 is coming down. Still not breaking highs here. Okay. Why don't you check other major Forex pairs besides for trades besides DJ? Well, I did for a very long time here. I decided to narrow it down a little bit. So, to focus just on a couple. So there is not much confusion around what we're doing here on stream. Otherwise, it's just too much confusion, I realized, after a couple months here. Too many different trades, too many different setups, right? Just clean. We know what to look for. And it works. We have been, we had the last 2 streams were very good since we switched it up straight away from the beginning. So, community made some good money. So yeah, therefore, let's flip it a little bit. But at the same time, if I really truly see something that I've been looking at for a while, in EU, GU, AU, and so on, I will definitely look for it. I will definitely look at a potential setup here. But at least we know what our main focus is. I think that's the most important. Absolutely. So 5 more minutes till the closure. It's actually super important to see how we close here. Five more minutes left. Bruce, I'm doing good, man. Hope you're doing well. Okay, we're pushing up right now. Dollar is pushing down. Look how the dollar is getting reacted to, or how the dollar reacts here. Of course, this is not, we all know this is not good for, or this is better for gold, right? This will push gold up here. Not as much as I currently expected, but at the same time, I think a lot of guys got trapped below the 1927. So if the dollar now decides to really truly flip below, let's say this level, so we have this particular level right here. We're already below it right now. We flip bearish on a 1 hour candle closure, and we have 3 minutes and 30 seconds until we close that 1 hour candle right there below. So this is not going to be good for the dollar if that's the case. If you actually close below it, especially below the previous body closure. It seems like a massive swipe here. Okay, a massive liquidity swipe to the upside, taking it out, swiping the highs, and then coming back down further. That means that gold will then do practically the same, whereas we take out the lows and we then flip. to the upside. So 2 more minutes, 2 minutes 40 seconds, 90.35, 90.39, and 90.27, 90.24. Two minutes. This is where the volatility comes into play. Right now, we're at a crucial level. You know, our previous body of gold is at, for the 30 minute, is at 1929.69. We have 1 minute 50 seconds left. A first sign would be closing above it. That's an hourly candle, yes. 500 likes, amazing. Giveaway coming later. We have what we wanted here. Beautiful. I need to set it up. No, it's good. Thank you guys. Appreciate the support. One minute left for that closure here. Lorenzo, at 30,000 subscribers, you should cut a bald head here. Well, what about the 10,000 members in our Discord? What about that? We're at 9,943. 43. We need 67 more people right now in our Discord to reach the 10,000 members. Working very hard for the community here. Because this is where the magic happens. This is where the guys are alive all the time, besides me. Which you can always join. This is what's happening here. I think this is absolutely fantastic. So, a lot of things are happening. And we're improving every single day. We have something new coming. And it's only going to get better. So, join our free Discord. Be part of it. 3 seconds. Push down. Oh, look at that. That's sneaky. That's sneaky. What a sneaky move. What a sneaky move. You see that? A closure just below that body of the previous candle here. To tease them. To tease you a little bit. To confuse you a little bit. No top wick. Let's see what we're doing here. We're getting somewhere though. This is important stuff here. So the dollar. Okay, dollar is still above this high. I mean, dollar's not looking that good. Are you come for a game of birthday chess after stream in the lounge? I could do that, yes. No problem. Ready to crush. Yeah, there we go. You see that closure here below on the 30 minute. I told you guys, if you close below the 1926.69, they're gonna tease you here. And they were always above it until the last second. The final second, they closed just below it. That shows how accurate it is actually here. I'm still looking at the 9027 now. So 9027 here, body, 30 minute. And of course the 9024 if you decide to continue here. It's the big 30 for me, mate. Living the best life. Birthday week up 3%. Amazing. Beautiful. Why don't you enter yet? Well, I have my level set. So these are decent. These are really decent levels here. I'm looking still at in the internal levels as well, which is the 1927 here and the 1935. So from this, let's say this is the range I'm looking at. Okay, this is one range. Another range is right here. We're now within that range. We're acting still within that range here. Anything above it is strong, clear buy. Anything below is strong, clear sell, in my opinion. Anything in between is potential buy or sell. So like potential buy below or sell, buy above and sell below. So it's pretty clear here, right? The lines in general. People are buying now. What do you think? Okay, interesting. It's possible, but no confirmation here. Should you treat every account with a better percentage no matter how much the balance is? It depends on how much you want to risk. Any thoughts about GJ? I think GJ is pushing up here for now. So we're not there. No. Are you going to take it easy now that you're 30? Well, that's not me. That's Reese in the chat, I believe. Congrats, dude. What is your guys' plan? You're planning to trade this all year round? What's happening here? You guys are planning, what about the summer? You guys are going to do something in the summer? It's coming up. I mean, July, August. Let's say August for sure. Any plans for August? Let me know. I'm willing to keep grinding. No problem. Keep grinding. I'm glad I will be all summer. Grind for the cold months. Gonna continue grinding. 10 days vacation. Unfortunately, we haven't had any vacation so far. Now I'm here. This year is about getting this right. Need to get up. Need to keep the momentum. I agree. It's worth the hustle for sure. Volume low during summer, true that. So there are a couple of workarounds for it, but yes. Hustle now, party later. Yeah. Lorenzo, how old are you, brother? You don't look a day over 20. I'm 29, bro. I live near the sea. I can do both. Beautiful. Same. The ocean is 10 minutes away here. Keep in mind, and this is important, guys. Can you tell me something about this candle right now? What do you see? What do you guys see right now on the chart? We are at 90.27, interesting level. However, what do we see here? Where's the wick? There is no wick. There is no wick. There is no top wick. Okay? I don't trust it. I do not trust it. Yet. I do not trust it yet. I think it's risky sell indeed. No top wick. What I think is they're trying to induce as many people as possible to go short now to reverse on them. I think this is what we're seeing so far. But there is no top wick of this candle. Wicks are extremely important to take into consideration when you trade. Because, I mean, where's the selling pressure? Like, you know, where is the selling pressure actually coming from? You want to fill up orders to reverse and to flip a candle structure. That's what you want to see. You want to see the following happening here. You are here, okay? And you have this candle structure right there, okay? And you open up. Oh, that's a little bit too much, but okay. Anyways, so you close here. Let's create another candle right now. If you see something like this happening here, okay, where you close and immediately come down, and this one does not have a top wick, okay, what tends to happen is that they induce many people to come down here. There is no selling pressure. What you want to see though, is you want to see the following. You want to come up, right? You want to first come up to then flip, okay, bearish right here, create a top wick, and then push price further down. That's what you want to see. Of course, you want to continue the body here. So you want to make sure that the wick is then up there. The body is then here. And you then come down further here. Okay, you want to see that body. You want to see that wick here. Otherwise, it's a tricky one. Okay. That's what happens when you close. A candle here, you open up. Let's say, come down. And then you push up and you turn green. That's one scenario. Or let's say open up here. You come up and then you can push down. And then you can push up again. You will end up in red. So be aware of that. You want to see the buyers coming in to then reverse upon them. So I don't trust this so far yet. I think that we could flip here. So I'm going to keep a close eye on this one now. And you see that buyers are constantly stepping in below these levels. Lorenzo, which best broker for crypto? BitGet? We are in a long since 26.74. If you want to join our VIP, by the way, my man, join our VIP because we have a private live stream this Friday. You want to be part of this? It's free. You get access to my cryptocurrency course as well. And I put a lot of work in it. And not just in the course, in the creation, but in the research. I think if gold would come up, must get all the liquidity from below 90.24 first. Okay, well, if you think that we're going to go and we don't close here and we flip, fantastic. Then I might be able to take buys already at 90.35 and not at 90.39. But so we can then actually secure ourselves already before we're reaching that major resistance. Hey, is the paper trading and real trading same or different? Well, it depends on the person you are. It totally depends on who you are as a person. But of course, real money will always be a little bit different. Real money trading. Remember me, Lorenzo from the V3, the Kingfisher. Yeah, what's happening, brother? Crypto is just a psychology that changes. Yes, completely. Paper trading doesn't allow for spread and or commission. Also, the stress is on another level. I know. I can for sure, 100%. Are we live streaming Uncle Jerome later? Well, if this is truly what is going to determine what we're going to do with our trading setup, we might do so. Yeah, but let's see. Dollar up and gold ranging. Interesting. No top wick for gold. Dollar up, is that the case? Let's see. Dollar trying to push. Dollar indeed trying to push up here. But look at, I mean, look at these lows, guys. Honestly, look at these lows here. Look at what you see below this level. It is this whole range is super reasonable and achievable here to get here. So gold sells right now is in my opinion quite risky. Abhishek, dude, I think we should enter with a stop loss. What do you say? What do you think? We will reach the 10,000 members in our community this week. We have to do something big. I'm still thinking what to do here, but we have to do something big here. 54, 46. more people, more individuals here in our community, and we have the 10,000 members. Incredible, incredible. Okay, buyers still stepping in for gold here. $30 to close, yes. We have 18 minutes left here. Oh, sorry, 12 minutes left here. I think there's a big chance the dollar will push down here. And will test the lows here. We'll test at least, or we'll come back down to the 102. Buyers are stepping in for gold. There is no top wick here. Could you guide us through the basic analytics? So depends on the strategy. We have a couple of different strategies. This is one of them. And you want to understand market structure first. You want to understand what are the highs and lows that are relevant. In what range are you trading? So if it's here, okay, you are trading in an overall. Let's say right here we have this range right there. You want to see what are the important highs and lows. Well, of the bigger range, we are now between 1924, right? That's this low, and a 1967 that is this high. Okay, within that range, what do we have? We have these imbalances right there. We have a strong high and a strong low. Why is this a strong low? Well, this low at 1924 created a higher high, which is higher than this high, and we create a higher body closure above here as well. So this low is a stronger low. That's why there is demand. Buyers are stepping in right here. So if you are in the upper echelon, I'm always leaning more towards the sells. If you are if you're down, you're more leaning towards buys. Unless you break below it or you close above it, right? So that's the external levels. Then the internal levels are as follows. In this case, you want to look for the following. So you want to wait and see, okay, what are the internal levels here? What happened here actually, okay? So first of all, we have a bunch of stop losses for sure built above here. That's no question, right? We're getting pushed down all the time. We have that gap here, that imbalance right there. That's easily can get filled. We had the same thing here. Like there is not much happening in between. So it's always an interesting level to look for setups within these particular zones. If you stay above it, then we still have the last low, the internal structures right here. What happened here? Okay, now in this case right now, the 90.35 high created this low. It took out the multiple lows. What happened? We took out the liquidity below both levels. And if we now flip and we close above here, I'm already interested looking for long setups, potentially entering earlier. And if you then close a body above here, I'm all in. Not all in terms of all in, but I'm all in the trade. I like the setup a lot here because then I think we can take it to the 1946, which is the lows of this high, this low, this break, which is also just in general a horizontal support level. Or resist level right here. Okay, the 90.45 is the target 1. So you want to break that higher. Now you see what happens is that there was no top wick created here. Sellers are stepping in. It comes down, but there was no top wick. I think there's a big chance we're going to flip here. The question though is, are we going to then continue or are we going to come down again and then continue? That's where, your strategy comes into play. We have to make a really important decisions. That's why I like to wait for the 1935, because I think the continuation makes much more sense from there. At the same time, in order to confirm a setup, you can always look at the correlated asset. If you look at gold, you need to look at the dollar index. The dollar index is, is super relevant. It does the opposite of what gold does, usually, tends to be. Okay, not always, you have to confirm this. But usually a stronger dollar means potentially a weaker gold. and a weaker gold potentially, or stronger gold potentially means a weaker dollar, and so on and so on. So what's happening right now? When you look at the dollar here, well, okay, dollar is looking not that particularly strong. Okay, we're trying to push here, but at the same time we're facing that resistance from this 4-hour level. Okay, and that 4-hour level right here is an important level to take consideration. You have that level right there. You're getting pushed already. On the 1 hour right now, you start building all these stop losses below that level as well. And I think there's a big chance that you can come down to at least internally then. Same thing. Take out and go for the lows here. Why? Well, internally you have this rejection point right there. You see that rejection point right here. You have this area of supply here. You have these lows here. I think there is a big chance we're going to go for these lows below that level. And take it out. If that happens, this is only going to drive gold further up. And I think the fact that we didn't see a body closure below the 1927 yet. At the same time, we have no top wick created. Dollar is not looking particularly strong. It's not looking weak. It's ranging, but it's not looking particularly strong. It builds up all these confluences right now. Okay. So what needs to happen if I want to invalidate the setup completely and remove the buys out of my head? Close below the 1924. Because that means that you would close below this low, which put in this high, which is a higher high. And you would continue its momentum potentially to the downside. But in order to be more confident about that trade then, you want to see enough selling pressure from candles as well. So not just from, you know, a breakdown and a closure. No, you want to see the candles pushing price down. You want to see these top wicks getting created until you break that. Now we're getting somewhere. Now we have the New York Stock Exchange open and we have news coming, or we have at least that event coming up here. Volatility is going to increase soon. EJ man, Dennis, my man. Thank you, man. Thank you for the support, brother. Keep also in mind that we have taken out these lows after, before the major, whatever, the New York Stock Exchange opening up here, the news coming up here, or that event with Jerome Powell. It is interesting. It is interesting. Osaka says, what does no wick means that the market are trying to trap sellers buyers so as they hit their stop loss to move in the opposite direction. It increases the chance of a potential fake out indeed, or liquidity swipe or anything in that matter. Yeah. What is that line? Dollar line. That's the liquidity. That's like, let's say you can assume that there were a lot of stop losses built up here. That's why it was such an aggressive move. A lot of buy orders were filled due to the fact that people had stop losses placed there. And that means automatically that when stop losses are placed, that instant buy or sell orders are placed in the market, which then are immediately triggered, which causes that spike. Bro, which website do you play casino games? I do not play casino games. unless it's poker. This is important, man. 2 minutes, 20 seconds until the 30-minute candle closure here. Buyers are stepping in. There was no topic created. It's starting to push. There we go. Again, keep in mind, guys, that it's again at exactly the same level during the 30-minute candle closure. Literally till the pip. Okay, we have a wick. We have a small wick now. Okay. One minute left. 30 minutes. New York Stock Exchange will open up. Volatility will increase here. Would you take a buy if 30-minute close is bullish? You'll buy a flip at the new candle and below the stop loss below the previous. No, I want to see higher high. I want to see it 90.35 getting broken here. So 90.35, potentially looking for buys there. Then 90.39 again. Alfana says, check your front door. Go check outside. I think that's at my old place. I moved to a new place here, but you can leave it at the security. You can leave it at security. And say it's for Lorenzo. He will know. He will know what to do. Or Natalia, Lorenzo. You can say what it is. You can call my name. Okay, 30-minute close. Yeah, so if we flip here. I personally would be surprised if we don't. But it does not really matter. We will have our position regardless. Buyers are stepping in. Definitely not the moment to sell here. That's for sure. There we go. I'm very curious to see how we develop above the 90.29 here. Clean it up. There we go. Damn, that was a fake out. We'll see. We'll see. We're seeing right now that there is selling pressure, but at the same time we're facing serious resistance at 1929, so or 1930. Thinking of buying it now. If you want to buy, then you wanna take some risky buys. I would say 1930 closure. Hello, I'm Crypto says I am short on gold from 1929.8. Okay. Yeah, keep in mind there's still some buying pressure right now. Like people are buying here. In bearish markets, you're looking for a buy. Well, if we break below the 1924, I'm looking for sells for sure. That's why we have sells below, buys above. Patience space for sure. Interest hike is good for the dollar. So bearish for gold, but there is not a certainty of an interest rate hike at all. They're not gonna. I'm not sure if they're gonna. I think they're gonna ask questions about it today. That's true. We're gonna see that soon happening. What about giveaway later in the stream? When did you change the breakout? I thought you trade SMC. I trade both. I just have different setups for different charts at different moments. It just all depends on market conditions, right? So sometimes the market conditions are different, and it's much better to look for a different type of strategy. We need to be adaptable as possible as traders, but you need to know when it's more realistic to focus on breakouts and when it's more realistic to focus on other strategies. I still always use supply demand, the correlations, the liquidity, fair value gaps, regardless here. Pretty much on every every single asset I trade here in general. SMC to find your setup range to find an entry. Yeah, I agree. Why don't you post your live trades on Discord? I've done it. I've done it. It's in the meta charts. Oh, wow. Look at that. Okay, let's see what happens here. Okay, buyers coming in. 20 minutes till closure. And at the same time, we have the, let me think, we have the speech coming up as well at 10. So very risky, very risky. But yeah, let's see how we close this hourly or 30-minute candle here. How many seconds delay on stream? It depends on how you are. If you are updated and you are actually, you know, and your connection is good and you're actually completely updated, should be like 3 to 5 seconds. But I'm leaning towards 3 because I've been testing it myself. Massive move here. Wow. 20 minutes before, dollar is coming up. We're now reaching this high. This peak high here. Yeah, I'm looking for the closure, of course. In this case, yeah. If you do flip here, though, we might see it flipping still. I'm not joking. We have news coming up. We have the 20-minute candle structure here. Let's see how this candle closes. Because you can easily see 5 minutes before the candle closure, massive demand coming into play, buyers coming in, stepping in, immediately flipping at, creating a massive bottom wick, and flipping from there. Gold going to plummet with Bitcoin going to the moon. So Bitcoin is really doing its thing, hey? It is definitely doing well. Our entry is indeed 26,740. Wow. Risky to enter Bitcoin now? Yeah, very risky to enter Bitcoin now, yeah. For sure. Dollar is still there. Still below that level. Are we going short? So it says closure. Closure means wait for the candle closure here. When you're looking for something. And don't immediately enter as well when you close below. Wait for a top wick getting created and see from there. Jay, is the giveaway done? You cannot leave the stream, bro. I know you leave the stream, man. You would have known the answer. Aditya says patience is key here, absolutely. Otherwise, do you think Bitcoin will drop to 28.2? I hope so. I hope it does. So I can buy more. And build up my position. Let's say it comes down to this. Let's say it comes down to this level. Okay. So let's say it comes down to the 1 hour. Okay, gold getting pushed up now. 50 minutes till closure. But let's say it comes down. I'm gonna buy my position again. Or I think a little bit lower, to be honest. And it holds here and it creates a new internal high. I'm gonna buy more. My average position will be around here. Stop loss will be on break even immediately. I'm just scaling out my position. We're risk free. Lorenzo, what book do you recommend to read? Well, I have one for you. A couple of them for you, actually. Let me show you which books I read. Gold's pushing, by the way. Pushing back up. No closure yet. Number one, Why the Rich Are Getting Richer. That's one book you want to read. Okay. Robert Kiyosaki. It's a classic. Classic. Love it. Next one, Layered Money. From gold and dollars to Bitcoin, central bank and digital currencies. Nick Bhatia. Okay. Love it. I listen to all the audiobooks. I don't like reading that much. I listen to the audiobooks here. Expert Secrets. Russell Brunson. Be the Man. Okay. We're gonna get back to gold in a second here. Be the Man. Stop lighting, start leading today. Garrett J. White. He's an absolute animal, this guy. I don't know if you guys know him. He's an absolute legend. And of course, the classic. Hard Times Create Strong Man. This is actually a friend of mine. The guy that wrote this. He died with cancer. Very unfortunate situation. Rest in peace. But he wrote this book before his death. And it became a worldwide phenomena. Okay, buyer stepping in here. No closure, 13 minutes. Look at the demand. You know what this is? We're gonna flip. What a manipulation here. What was the first one from Kiyosaki? Why the Rich Are Getting Richer. You will find it. Yeah, no, this flip is going to be nuts. If this is the case here, and we close above the 90.35 right now, we're going to flip, we break these highs. It's a done deal. It's going to be a serious move. A long bottom wick. 90-30 buy is risky. It depends on the closure. It depends on the closure, but I do not assume that we're going to close. But well, you don't know. You look how much buyers stepped in here. That's why FOMO is not necessary here. Absolutely not necessary. Every single time, you know, sells below, you know, people get triggered. People are like, it's going to come down. And when it's moving that aggressively, they give enough time for the people to enter, and then they flip. They reverse. That's why that closure is such an important factor here. Are we going to reach the 10,000 today? Maybe. 43 people here. The community is, let's see what the community is doing. Let's see what Yannick is doing here. Look at gold as well. Hey Lorenzo, I joined V3 yesterday. Welcome. We're gonna start with the live trading session in Discord, and we're almost full. So welcome. So yeah, if we come up now and we flip here and we close above the 1929.8, like say 1930, it is very bullish. It's a very bullish sign here. If he closes that level, we're bearish. Well, I still want to see that body closure below the 924. 10 more minutes left. And then Jerome Powell's going to start here. So... Bitcoin, man. Wow. People will wake up soon. They will see what's going to happen here. It is it's pretty crazy. We managed to get a 900% trade set up here. A 900% trade with crypto. Okay, 8 more minutes. Let's go to the crypto wins. Hello, what's going on? Okay, bravely explain how gold is about to go and why. So right now we're seeing that we came down. We took out pretty much all the lows here. Everything is cleaned up right now below. It's all about the closure here. The hourly candle closure. The moment we came down, a lot of buyers stepped in here. But you see again that we're facing that resistance right now. But on the lower time frame, look what we're building here. We start building serious liquidity to the upside here. I think we're gonna make the move. I think there is a big chance we're gonna go up here. So unless we close an hourly below, I'm actually quite. I'm actually waiting for that flip here. Why didn't trade crypto with Black Bull? Brokers and crypto is not what you want. You want to trade on futures because there's no spread. You have exact entries to the pip. I see look at 1 hour most of the time when you enter. Do look into lower time frame. Sometimes 30 minute, 15 minute. It depends. Sometimes 5 minute. It just depends on what time we break. And what candle is important to look at. Can you hold futures for so long? Yeah, as long as you want. How do you get started with trading crypto? First of all, you go to our community. You get access here just by signing up to our link. You don't have to pay us anything. You get access to my free cryptocurrency course and our VIP trading section. Why we have created this VIP section? Well, we want people to be actually really interested in crypto in general. So we have an access section that's divided from the Forex sections. You cannot see it until you're in it, just because it removes a lot of some people are not interested in it. They will be interested in it later. And what we're doing, we're starting to build killers in our VIP section soon, because crypto is going to do some big things here. And people don't want to are not interested in trading crypto until it's too late. How do you identify if the news is telling the currency that will go up or down? Well, when you break highs and lows. So you have external highs and lows. You have internal highs and lows right now. We're looking to break the internal highs for entries here. It's asking for my UID. Okay, then you have to look at instructions. There is an instructions plan below here. Read carefully. A lot of buyers are stepping in. A lot of buyers are stepping in after that massive reaction here. So I hope people that shorted here took profits. Wait for a retest before buying. I agree. Bitcoin, indeed, I agree. What's the link I should press for the instruction part? Just the link. You can go to BitCat, for example. Okay, almost there. We have 4 more minutes, 3 more minutes for the hourly closure. And we came all the way down. We didn't have a closure here. If we would have closed below, interested in sells right now, we are far above that. So I think a lot of people got triggered here to sell. And now we're flipping up on them. We have 3 more minutes left here. We have this internal structure right now here, which is actually the resistance area of like 1930. That's one layer. But at the same time, the 1935, the 1939 are still possible, are still there. There's still a possibility for it. Looks like we're about to flip. Yeah, look at that. Look at that reaction here. Incredible. Art, my man, thank you for the sub. Hope you're doing well. Welcome. How long will the Powell meeting be? I think it's like an hour. Q&A, it's like an hour, probably. Roughly. My first account blown is actually Binance Crypto. Big amount for me. Quit 1 year, learn stock, give up Forex, start building back interest, and finally settled on gold. Might try back crypto, yes. It's a beautiful combination. Gold, trading gold right now and then also trading crypto. Trying to learn this until the market is back on track and everyone starts talking about it. You will have an edge. And therefore, we have this event coming up here. It's a live crypto mastermind. You want to join it? You want to be part of that. I'm not sure if you can see it, but anyways. It's me right there in the middle. $30 seconds till closure. Facing same resistance around this level here. Do you agree that the market has been moving weird or different in the past 2 weeks? It is seasons for seasonalities for sure. Okay, 1 hour closure has been above this level indeed, and above the 1927 as well here. So let's see what's happening right now. That event is going to start very, very soon. Let me see if we have him here. Let's see what's going on and how the market reacts to it. Not yet, not yet. Uncle Jerome. One of our favorite uncles here. Like, I would love to see it flipping, to be honest. But if it doesn't happen, then yeah, it's the same story. Then that body closure is key here below. Bookface says, we'll be happy if buy. Yeah. Should we go long or short? Look at the chart. Just to clarify it for people that are new here. We have our level set. Okay. We have a level set here. I have this level in the middle as well. It's 1930. It is now causing the resistance here. It's a good start. But you really want to start closing above these levels for buys and closing below these levels for sells. And once Uncle Jerome is live here, we will listen and tune in a little bit as well, and see how market is actually reacting to it. Dollar is ranging until probably this event here. I think we're gonna see not much until we have this event, so we need to really wait a couple more minutes until that event starts. I think then we need to see that expansion here. It can rocket both ways anytime soon, damn square. Yeah, I agree. But closures are important. Closures help you remove a lot of noise here. Especially closures on the 30-minute, 1 hour, and so on. It's gonna be a long stream today, I can already tell it. We have Jerome. We still have a lot of potential here for gold, so... Hey Lorenzo, how do you get to know about upcoming events and their effects? Please answer. Yes, so investing.com/economic calendar help you out with like showing the events here. When there is like a little voice note right there to the like or voice icon here or memo icon, you know it's an actual speech, and most of these speeches are important if they have high or if they are assigned as high impact. And we should start any given moment. We already should have started here. So Uncle Jerome is still at the bathroom. Where can I watch Powell speech live? Right here. You have the, I think it's on the PBS NewsHour channel. Or you just type in Jerome Powell live. If you guys see this, do you think the dollar is looking strong or weak? What do you guys think in general? Like, just look at the dollar here. What do you think? Mixed answers here. Pretty weak. In my opinion, pretty weak as well. You can see clearly that we are like, we're not moving up here. We're not moving up with a lot of volume here. We're trying to push, but no, this is not what we're looking for. This looks like continuation to be honest, to the downside. So therefore, if there's a negative correlation between gold and the dollar here, and gold already took the lows before that event, isn't waiting for a flip more reliable here? That's the question. First liquidity grab above and come down. He's now live. Is this a delay? No. Okay, perfect.
It is the intention of the chair.
All right, let's go.
Two pieces of our committee markup in the second week we return in July. I now recognize myself for 4 minutes to give an opening statement. Thank you, Chairman Powell, for joining us today.
Dollar, gold. Okay, dollar and gold. That's what we're focusing on.
Two troubling trends the Fed expects will continue. As you said last week, the process of getting inflation back to 2% is a long way to go. So even though the Federal Open Market Committee did not recommend a rate increase at last week's meeting, it's fair to say that the Fed will continue to make additional increases in the months ahead. We'd like to hear your thinking on those matters. As the FOMC again pointed out last week, the labor market still appears tight, with Fed policymakers projecting a rise in an unemployment rate to a still low 4.1% at the end of the year. Despite pressure from the left, the Federal Reserve must remain committed to eliminating this stealth tax on American workers and families, and I urge you to continue that resolve. A few weeks ago, Congress took the first step toward getting our fiscal house in order through the Fiscal Responsibility Act. Republicans will continue fighting for sensible spending reductions to combat inflation. This stands in stark contrast to Democrats' spending spree that poured nearly $2 trillion into a
Let's see if you are completely updated here.
Economy that was already flush with trillions of savings provided by earlier bipartisan COVID rescue efforts. And after keeping interest rates too low for too long, the Fed was slow to address the problem. In a stunning about-face, the Fed then raised interest rates by 5 percentage points in a little over a year, the fastest spike in modern history.
Yep.
This approach introduced accelerated interest rate risk for which companies, workers, and families across the country were not prepared. The bank runs we saw earlier this year are an example of the consequences. Now, we're told these runs represent a systemic threat to the stability of our financial system. Add in the commercial real estate exposure facing financial institutions, and it becomes very easy to understand the mounting anxiety consumers and job creators share. And I share their anxiety as well. The rapid rise in interest rates, coupled with knock-on effects of the bank failures, have led to signs of a credit crunch across the economy. This would have a damaging impact to consumers and job creators alike. To top it off, Vice Chair for Supervision Michael Barr is undergoing a so-called holistic review of capital requirements. And something interesting that he mentioned in the press even yesterday is a new approach to stress tests that I can't quite understand. If reports are accurate, he's pursuing a massive increase in capital standards for medium and large institutions. This would limit banks' ability to lend money, exacerbating the looming credit crunch and starving families and small businesses of the capital they need. Financial markets will also bear this strain as they will be forced to absorb nearly $1 trillion in new treasuries. This has led many to believe the Fed may be called on to help, perhaps through its repo or other.
I can't wait to see Uncle Jerome here.
Clearly, our economy is in a precarious position, from inflation to a potential credit crunch to substantial balance sheet risks for financial institutions.
Dollar looking weaker?
There's a great deal of uncertainty on the horizon. Uncertainty from the Fed supervision and regulation is the last thing the well-capitalized banking system needs now. Following numerous supervisory failures and a new vice chair for supervision at the Federal Reserve injecting politics into policy, it's become clear that Congress may need to again examine separating supervision and regulation out of the Fed and gaining greater oversight and control by Congress in the elected branches.
Hey Lorenzo, what's your overall thought on gold today?
Chair, thank you for being
We
here
might seeing a
today.
flip here.
And the chair now recognizes the ranking member of the full committee, the gentleman from California, for 4 minutes for an opening statement.
Thank you, Chairman McHenry. Chairman Powell, welcome back. First, I'd like to start by acknowledging that the Federal Reserve made the right decision to pause interest rate hikes. As you know, since last November, I've cautioned against any approach to monetary policy that ignores the Fed's maximum employment mandate and results in a
Demand coming in.
with millions of
Look at
people
that.
losing their home
Pushing.
jobs. While we have had strong job growth thus far, experts contend that this trend will not persist with more rate hikes, especially in light of new challenges. For example, the recent bank failures have resulted in the banking industry further restricting credit, making it even more important for the Fed to move with caution. The progress that we have made in reducing inflation is borne out in the latest consumer price
Oh,
index.
look at the candle. Look at gold.
It's been months 10
So
months
exciting.
since the passage of the Inflation Reduction Act, and inflation has successfully been cut in half. Every single Republican member of Congress voted against the bill and chose to cozy up to the wealthy tax cheats instead of working with Democrats to bring down costs for middle-class families. However, the only way we will fully
Would you trade the news? Yes.
inflation is to address the primary driver of inflation, soaring housing costs. Congress must invest more in fair and affordable housing. Under President Biden, unemployment is also at a historic low, and job growth is on the rise. So far, there's been 29 straight months of strong job growth. In fact, a record 13 million jobs have been created since President Biden took office. Democrats are working to build on this progress and grow the middle class so that everyone can share in this economic growth. Republicans, however, just can't seem to get their house in order on the heels of almost blowing up our economy by forcing a national default. They are now picking a fight over a tiny fee of less than 1% of total housing costs. Ignoring the costs home buyers are paying with
Let's
7%
see.
interest rates, appraisal fees, and title insurance. Instead, they're fighting about gas stoves. In fact, just a week ago, Republican disarray got so bad that it halted business on the House floor for the first time in 20 years. Lastly, as we continue to monitor the banking system following the recent bank failures, the Fed must act to correct the supervisory and regulatory failures identified by our committee's oversight.
Everyone is looking at gold right
Democrats
now.
recently introduced 11 bills, including
They're all watching all these live
3 of
streams.
my own, to strengthen the safety and soundness of our banking system and hold executives
all in position.
accountable for their misdeeds. The Senate Banking Committee is holding a markup this morning on a bipartisan bill on bank executive accountability. So I
He's a little bit
urge Chair
stressed.
McHenry to join us in
I think he's in
advancing
drawdown.
sensible reforms to strengthen our nation's banking system. With that, I yield back.
Generally yields back. I now recognize the Mr. Barr, Chairman of the Subcommittee on Financial Institutions and Monetary Policy, for 1 minute.
We expect proposals from the Fed's Vice Chairman for Supervision that could increase capital for financial institutions as much as 20%. Our already well-capitalized banks withstood the COVID shock and severe Fed stress tests as the economy is facing headwinds from the Fed's own rapid rate hikes. Now is not the time to be engineering massive new regulatory changes or hindering regional banks, which have already been under stress. New onerous one-size-fits-all regulation by the Fed needs proper vetting and transparency. I would ask you today to commit to providing us with analysis done so far by the Fed on the Vice Chair's new proposals. I also respectfully ask that the Chairman revisit Section 1107A1 of the Dodd-Frank Act to observe that the Vice Chairman for Supervision is authorized only to develop recommendations for the Board and oversee supervision and regulation. The law does not give the Vice Chair special abilities to unilaterally write his own preferred regulations.
They're going to test him. They're going to test him. I'm telling you.
Unilaterally write public-facing
Gonna be an interesting
reports on
one.
bank failures or results of climate scenario experiments. Consensus is paramount.
Gentlemen, time has
Yield back.
expired. We'll now recognize the Subcommittee Chair on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Chair McHenry, and to Mr. Powell for being here today. In the wake of what seem to be endless novel problems and disruption, I believe the Fed and Congress have done a reasonable job given the cards that we've been dealt. And indeed, it looks like the widely anticipated recession from the endgame of COVID disruptions, if it occurs at all, will continue to be more of a soft landing than a
Natkita,
disaster
welcome.
for our economy. Well, there is certainly more work to be done, but in the immediate term, we can reflect with satisfaction on the historically low unemployment, 11 straight months of slowing inflation since the passage of the Inflation Reduction Act. However, I recognize that the necessary monetary policies put forth to combat inflation have
Wait
not
for the
been
30-minute candle closure.
including
30
a
minutes.
fraction of our banks
Let's see how we close
choose to
here.
Ignore the Fed's clear forward guidance on that interest rate hikes were in the pipeline. We on this committee remain committed to alleviating the financial stress for everyday Americans to pay rent and get food on the table. I look forward to discussing how recent policies have
Dollar looking weak.
and what else we should do.
Gold already took the lows. So I'm actually more interested. I'm hoping for buys. I'm hoping for buys if we flip her. But we really have to wait and see her.
The Board of Governors of the Federal Reserve System. Chair Powell, we thank you for your time and being here. We'll recognize you for 5 minutes to give an oral presentation of your written testimony. Without objection, your written testimony will be made a part of the record. Chairman Powell, you're recognized.
Thank you, Chairman McHenry, Ranking Member Waters, and other members of the committee. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report.
Chairman Powell, if you'll pull the mic closer. Thanks.
We at the Fed remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand
Okay, boom.
that high inflation is
Let's go.
rising,
Dollar down.
and we remain strongly committed to bringing inflation back down to our 2% goal.
2%. The same speech
Is the
as usual.
responsibility of the Federal Reserve, and without it, the economy does not work for anyone. In particular, without price stability, we will not
11 minutes for a closure here of the 30-minute candle.
strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The U.S. economy slowed significantly last year, and recent indicators suggest
My
that
man Jeff,
economic activity
welcome. Hope you're doing well, my friend.
expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher.
We're finally coming down here to fill out that gap here that we saw below.
And slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 5 months of the year, job gains averaged a robust 314,000 jobs per month. The unemployment rate moved up but remained low in May.
Remained low.
0.7%.
Labor force still
There are
strong.
some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 50. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand is still substantially
Strong.
exceeds the supply of available workers.
Yep.
Inflation remains well above our longer run goal of 2%.
This is not good for the dollar, by the way.
The 12 months ending in April, total personal consumption expenditures prices rose 4.4%. Excluding the volatile food and energy categories, core PCE prices rose 4.7%. In May, the 12-month change in the CPI came in at 4.0%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go.
Okay.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. With inflation running well above our longer-run goal of 2% and with labor market conditions remaining tight, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5 percentage points since early last year and have continued to reduce our securities holdings at a brisk
8 minutes for closure.
We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. And the extent of these effects remains uncertain. In light of how far we have come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the FOMC decided last week to maintain the target range for the federal funds rate at 5 to 5.25% and to continue the process of significantly reducing our securities holdings. Nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at last week's
Dollar
meeting,
coming down.
considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional
Dollar pushing further.
and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, we will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity, inflation, and inflation, economic, and financial developments. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability, again, is essential to set the stage for achieving maximum employment and stable prices over the longer run. Before concluding, let me briefly address the condition of the banking sector. The U.S. banking system is sound and resilient, as detailed in the box on financial stability in the Monetary Policy Report.
A lot of buyers stepping in here.
The Treasury and the FDIC took decisive action.
If we close below it, I'm looking to sell it.
And to strengthen public
If we come up and we break above it and we close above it, I'm looking to buy it.
including that of Silicon
It's
Valley
pretty
Bank,
straightforward.
and the resulting bank stress have highlighted the importance of ensuring that we have the appropriate rules and supervisory practices for banks of this size. We are committed to addressing these vulnerabilities to make for a stronger and more resilient banking system. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
It's all about volume now.
Thank you, Chairman.
Dollar is
I'll
dropping.
recognize myself for 5 minutes.
We're waiting for this moment here.
Chairman Powell, as I laid out in my opening statement, inflation continues to be broad-based and persistent. Both of
Gold
which
is
are
facing a lot of
concerning.
resistance at 1930.
Last week, the Federal Open Markets Committee decided
Anything above
to
is interesting.
pause, rate increases. And at the same time, the committee alluded that it would raise rates more later in the year. And so how should the FOMC's posture at the June meeting be interpreted? Will the committee continue to raise rates later this year? What's the thinking of this? What are we to understand?
Thank you, Mr. Chairman. So you're right, of course. We did decide to maintain the federal funds rate at its current rate at this meeting. At the same time, participants submitted personal forecasts suggesting that almost all of them thought there would be additional hikes. And I just want to say those two things are entirely consistent. The point being that the level to which we raise rates is actually a separate question of the speed with which we move. Earlier in the process,
shout out to Just Ozzy, man. Thank you.
It's not very important now. The sense of the summary of economic projections and the decision really is just that, given how
Use it
far
for the
we've
giveaway.
come, it may make sense to move rates higher, but to do so at a more moderate pace. That's really it. You know, we were at 75 basis points for several meetings, then we were at 50 basis points, then 50 basis points, 25 basis points at 3 consecutive meetings, and now we're
10.
moderating that pace,
Okay.
much as you might do if you were to be driving 75 miles an hour on the highway, then 50 miles an hour on a local highway, and then as you get closer to your destination, as you
go
drive
lower,
to that
yeah.
destination, you slow down even further.
Okay. So it is more data is necessary for the Fed to make these decisions. And that's one interpretation, but thank you for a broader view there. I also want a broader view on this question of the vice chair for supervision is performing his own personal holistic review of the Fed's regulatory framework for bank capital and liquidity. In an interview yesterday, he discussed some version of a new type of stress test even, striking complete confusion in his description of it. And at the same time, we have testimony from you, even from the Vice Chair of Supervision, saying that we have a sound banking system that is well capitalized. You will sit in judgment of this proposal that the Vice Chair for Supervision will bring to the full board on this holistic review of capital. There are a lot of discussions about the amount of capital he's talking about. the concern that this is pro-cyclical.
Dollar breaking down.
At a time where our economy
Let's push
with
up for
higher
gold. Let's
rates,
come and close above the
you're
1930.
measuring what's happening in the broader economy, and at the same time, we're going to have a major piece of capital required by financial institutions, which will further restrict lending. So how can you tell us to think about that, given your seat on the Open Markets Committee and as a Fed governor? How would you interpret that?
So I guess I would say you're right. There are a significant number of proposals that are kind of in the works. They haven't been finalized, let alone brought to the
Okay,
board.
volume. Let's go.
I can't really get into specific
1 minute,
details.
55 seconds till closure.
Well, we'd like your thinking, Chairman Powell.
I will-
That's what we'd like.
but what I can share is, principles.
Let's flip here. Come on.
Regulatory proposals.
Let's push up.
Go to the board. Every person on the board, that's 6 governors now, has an obligation to evaluate and vote on those, and I'm one of those people. I also chair the board. So a couple things I would point out. Just first that, I think regulation should be transparent and consistent and not too volatile, and particularly as it relates to capital requirements. I do note the central importance of capital. We want banks to be resilient to shocks. We want them to be able to lend in
1 minute.
bad times. We want, in particular, the GSIBs, the 8 largest banks, to have high levels, very high levels of capital.
Let's smash that like button.
Indeed, we spent years raising those levels over a long period of time, and I think there's broad agreement, as you point out, that capital is strong. And the question there will be what sorts of increases will be justified. That's what we'll be looking at. The other thing is to point out the trade-off between higher capital. The benefit of it, of course, is to have stronger banks that can lend and maybe survive more kinds of crisis.
40 seconds.
But there are costs as well. And I think it's going to be, as always, a question of weighing and balancing those costs. And that's what I'll be thinking about. The last thing I'll say about that is just we benefit from having banks of all different shapes and sizes in our system. And we want to be careful not to regulate the smaller banks to the point where really their business models are challenged for all but the largest banks.
Well, this committee would expect to see a quantitative analysis of whatever the
look for the cut to the
capital,
base for dollar.
charge is going to be. We would expect
Especially
that
after breaking
from
this level.
the Fed, as we do from other
101.87.
With that, we'll now recognize the ranking member of the full committee, Ms. Waters.
30-minute closure above. Let's go.
Thank you very much. Chairman
Beautiful.
Powell, at this committee's last hearing on digital
Let's create a
assets,
bottom wick
my
and
Republican
continue
colleagues
moving forward here.
proposed a stablecoin bill that would create 58 different licenses with federal regulatory approval over only 2 of the licenses. The remaining 56 licenses can be issued by each state, territory, and DC with little or no federal oversight, regulation, and enforcement. This proposal takes state preemption into a whole new level. It effectively
Really
allows
nice,
every
really clean.
state to preempt another state. DC-based coins, for example, would be sold to individuals nationwide, and New York or North Carolina regulators could do nothing. to
Bitcoin
protect
pushing
their
up
own
like
records,
crazy as well,
while
indeed.
even the Fed would be severely hamstrung in providing any oversight. I've argued that we should allow states to be part of this process, but we must have a strong, enforceable federal floor with a role for the Federal Reserve.
We're getting
to
somewhere.
approve and
Love it.
provide oversight of payment.
Gold is doing
Stablecoins
well.
issued by non-banks in order to ensure that consumers are protected. Such a framework is similar to our dual banking system, and it would ensure that non-banks and banks are treated the same. We should also bear in mind that payment stablecoins are a new form of currency intended to allow individuals to pay for things with them. As such, do you agree that it is important for the Fed, as our central bank, to have a chance to approve or decline any
Almost at
state
10,000 members.
licensed
35 more people for the 10,000. Let's do it.
payment stablecoins nationwide?
First of all, let me say we appreciate that we've been able to offer our views on these things to your staff and also the majority staff, and we appreciate the consideration that's given.
We're waiting for this flip. We are waiting for this bullish flip here, breaking above the 1935 and 1938/9, and we're looking to long it until 1946, if not 1950.
And we believe that it would be appropriate to have quite a robust federal role in what happens in stablecoins going forward, and that leaving us with a weak role and allowing a lot of private money creation at the state level would be a mistake. But nonetheless, again, I do appreciate that we've been able to be heard and share our views with the committee.
Well, thank you so very much. I am appreciative for that clear answer. The next question that I have for you is a bit unusual. But one of the reasons we push diversity is because those things that have not been discussed, issues of people of color,
Man, thank you. Welcome.
have not been dealt with. I'm going to throw you something that you would not expect. Earlier this week, our nation celebrated Juneteenth, which Congress recognized as a national holiday for the first time since 2021. The holiday celebrates the day enslaved African Americans in Texas heard that they were free, 2.5 years after the Emancipation Proclamation was issued. To this day, Black Americans grapple with enduring racial economic inequality that has its roots in slavery, as evidenced by the black-white gap in net worth and home ownership rates. My bill, the Federal Reserve Racial and Economic Equity Act, would require the Federal Reserve to carry out its duties in a manner that supports the elimination of racial and ethnic disparities in employment, income, wealth.
You really want to break above the 1935. Why?
Now,
This whole range facing
the Fed
resistance
has
as
a
well
number
here.
of duties
Yet buyers
to
are
pursue
stepping in.
maximum employment in the monetary policy.
Just real quick, you have to break above these levels. Why? You have this whole range. Buyers are stepping in, yet you're facing the resistance as well. So you're kind of getting compressed right now from both angles. You really want to see that expansion after this or these buyers stepping in here. If that's the case, fantastic. Again, if it closes below right now, I almost have no doubt that we're continuing its momentum to the downside. So that closure below the 1924 is fantastic. Body closure and a closure above at least the 1935, if not higher, is looking to continue to 1945 or 1950. Somewhat in that range here. So we need a little bit more volume, but you see already how fast it goes here. Or if just, we see that volume coming into the market.
Highly valuable social goals to pursue. I would say our ability to take part in addressing those issues is fairly limited. We have one federal interest rate that we set. We do try to keep in mind, as you know, not just the aggregate national level of unemployment or employment, but also that for different ethnic groups. So we take that into account, but I would think, and I think that's just part of making sure that we feel like we have all Americans in the room with us when we're making decisions on monetary policy. I will say, though, I think other agencies are better suited to address these deep issues.
Thank you. We must have this continued discussion on racial equality. I yield back.
The lady yields back. We'll now go to the Vice Chair, Mr. Hill of Arkansas, for 5 minutes.
I thank the chairman of the committee and Chairman
Dollar
Congress
pushing down
for
very
back
significant
before
here.
the committee. And,
Makes sense
this
based on what he's saying
morning,
right now.
Reiterated, and certainly Vice Chair Barr has reiterated a number of times that the banking industry here in the United States is well capitalized. And in fact, capital levels have remained robust despite COVID-19, with a 20% plus unemployment rate increase and a 9% output gap. They've remained stable through government shutdowns. They've remained stable through severe stress testing.
There we go. Volume coming
Maybe
in.
more importantly,
Let's go.
just
Let's
in the
break up.
last few months, since the first week of March, you've seen strong capital come into play as we've grappled with the reality of a 40-year increase in short-term interest rates and that impact on banks. But as the chairman said, Michael Barr continues to say he wants to increase capital requirements on certain financial institutions. And in March, you testified.
She went short. She went short on gold
said,
here.
I will do everything I can possibly do to bring people together, meaning on the Board of Governors, in
I can see it.
consensus and have a capital framework that could be broadly supported. So to what extent have you and the other governors been involved in this so-called holistic review by Vice Chair Barr? Has he briefed the other members of the Board of Governors thus far?
Yes, and we've all been briefed by staff, really, on the proposals, but as I mentioned, they're still somewhat in motion. But yes, we've been briefed.
So you would say those proposals are still under consideration and that there's no final decision that's been taken by the board?
Well, no, once the proposals really do settle down and are written up, they'll come to the board for a full discussion and a vote.
Has the Fed board reconstituted now the Committee on Supervision and Regulation?
They're all a MetaTrader. They're all like,
Who's
no.
on that committee now?
So that committee is chaired by
Draw down.
Vice Chair Barr, and it also includes Governor Jefferson, and it includes Governor Bowman.
When you look at capital in the U.S., and I look at the globally significant banks here versus other places in the world, would you say that the U.S. banks, the U.S. GSIBs, are better capitalized than their global peers in Europe or in Asia?
Dollar is pushing down much harder than gold is pushing up.
At or near
Okay,
the
so
top
that's
of the
why
league table. I think there are
that closure is so important above the
jurisdictions that
90.35 here.
also have broadly similar levels of capital strength.
We
Yes,
came from
they're at the top.
90.24 to
I
90.31.
looked at it this morning.
We're getting somewhere, though.
U.S. GSIBs have 11.3% capital without any kind of modification compared to their European competitors at only 9.9%. So would you say that we're better capitalized than the European banks, the European
1 second.
GSIBs?
I hate to call out the other jurisdictions, but I would say our banks are very strongly capitalized and also competing quite successfully globally outside the United States.
Yeah, I agree, and I think we've strengthened capital, we've strengthened our supervision, notwithstanding the problems that we saw this spring, which we've talked about ad nauseum here. But that capital standard does make American banks, I think, stand out. And wouldn't Basel, the so-called Basel III holistic reforms, wouldn't it be better if the European banks did a holistic review and actually got their capital up to American standards?
So I think they are bound by the same. No one's bound by these, but they have agreed to follow the same standards, and I think they're going through the same process we're going through.
Same topic, are the FDIC supervisory process and the OCC supervisors, are they involved and engaged with Vice Chair Barr in looking at this, quote, holistic review of capital adequacy?
I think,
In other words, are they providing their input to the Vice Chair for supervision in their own views on this topic?
on the regulatory proposals that are relevant to them, yes. I think on the capital proposals, yes, I believe so.
And you made a comment a minute ago, I think, to Chairman McHenry's questions about that you'd like to see rules and supervisory rules consistent over time. And I think that's frustrating here. We see change in administration. Sometimes we see change in rules, which is, I think, frustrating to the private sector and to market participants. I note that the Biden administration says that the Financial Stability Oversight Board should now base their decisions on size as opposed to activities. And for several years now, we've had an activities designation and a cost-benefit analysis. Do you think the activities designation gives supervisors more discretion at FSOC to select who should be deemed under their supervision?
So I actually think that one
In other words, is size alone, should we be looking only at size, or should we look at cost-benefit analysis and activities? And my time's expired. If you'd answer in writing, I would appreciate it. I think this is an important issue.
Dollar breaking the lows right now, coming back to 101.87.
I'll go to Ms. Velasquez. of New
Reaching,
York for 5
continuing for these lows. If we break below this level,
Powell,
we're going for the
at your press
101.6.
conference last week, you
Gold
stated,
really
and
needs
I
that push
quote,
up here. Really needs to
"The
break the
committee
highs.
is completely unified in the need to get
Internal
inflation
highs.
down to 2% and will do whatever it takes to get it down to 2% over time." Some analysts have interpreted this statement as the FOMC's willingness to trigger a recession in order to get inflation to 2%. How would you respond if this is a fair and accurate interpretation?
So our statutory goals are price stability and maximum.
We're a big resistance, but will fly if we pass through. I agree.
Tools to achieving those.
I agree.
In the case of
The volume is there.
we still have historically low unemployment rates and high.
We are coming up.
High participation, a very strong labor market. We're very far from our inflation target of 2%, and we're very focused on getting back to 2%.
And how does the FOMC takes into consideration the impact of rising interest rates on LMI?
This is what we want to see. Beautiful.
and small businesses. when
Let's go. Dollar
determining
down.
Monetary policies.
So we only have one interest rate to raise or lower. It's not
Let's come down to these lows.
one main interest rate to raise.
Break
or
these
lower.
lows. Continuation.
Applies to everyone, but I would say that inflation hits LMI communities and people generally at the lower end of the income spectrum much harder than people in the middle or at the high end, because high inflation can get you into trouble right away if you're living on a fixed income just to cover the basic necessities. So it is for the benefit of those people that we must get inflation under control. It's for the benefit of all Americans, but particularly for those people. And we keep that in mind as we are strongly committed to getting inflation back.
That's why the body closure is so important, huh?
Well, and they are the same people that are having a hard time accessing loans. The same with small businesses. Chair Powell, Vice Chair Barr's report on the Fed's review of Silicon Valley Bank states that while there was regulatory tailoring conducted in response to S2155, there was also, and this is the part that really concerns me, a cultural shift at the Fed under the direction of the previous Vice Chair for Supervision.
Let's push up. Let's go.
According to the report,
we're going to sit here and we're going to wait until we break.
Shift included pressure to reduce burdens on firms, meet a higher burden of proof for a supervisory conclusion, and a need to accumulate more evidence than in the past. As chair during that period, were you aware of this cultural shift and the impact it was creating?
So I think we learned from the Silicon Valley failure and the others that there is going to be a need for stronger supervision and also regulation for banks of that size. And I'm committed to learning the right lessons from this exercise.
Buy or sell. I'm more into buys here.
But,
absolutely.
Were you aware of the cultural shift?
So I can't really characterize it that way.
Where we put the stop loss on gold, that depends on the breakout, depends on the last candle before we broke in the closure.
So you disagree with Chair Barr's report in that respect?
I'm sure that the people who wrote the report were accurately reporting what
dollar is really getting smashed right now, coming down.
Were you meeting
was looking weak all the time. We're talking about it already. We're breaking below. This is only good for gold.
You know, we sat quite near each other.
And never discussed the cultural shift.
I didn't say that, but I don't remember it. The way you're describing it is not what I recall. I recall Vice Chair Quarles talking about things like focusing on the really important issues and not getting diverted into other.
So the way it was described by Vice Chair Barr is not what you recall.
Well,
so what
I had no part in. I said I had no part in preparing the report. I'm confident that the staff who worked on the report reported accurately what they heard. I'm sure that that's right.
So what steps did you take proactively to meet with regulatory and supervisory staff?
Well, I think we're taking significant steps now. We're, as you know, under Vice Chair Barr's leadership, we're looking carefully at these events and asking
Uncle Jerome, come on, give us some volatility here.
With supervision.
Show us the volume.
There is a point to be made that there are situations in which we need to be more forceful and more proactive.
Every single word, every single sentence matters.
In regulation, I think we're learning that we need to update our thinking around liquidity regulation, which was based on a certain speed of bank runs, which now looks to be outdated.
My time has expired.
The gentlelady's time's expired. We'll now recognize the gentleman from New York, Mr. Garbarino, for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. I just want to start off by asking a few yes or no questions. Was the Silicon Valley Bank failure a result of a liquidity issue?
I'm sorry.
Was Silicon Valley Bank failure a result of a
Great
liquidity
question.
issue?
Among other things, yes.
Signature Bank failure, the result of a liquidity issue?
Yes, I mean, that's not, there's also a lot of very bad management decisions being made.
But liquidity. First
Ooh,
Republic,
this is tough.
failure
This is a
result
tough
of
pill to
liquidity
swallow.
issue also?
Among other things, yeah. I mean, I wouldn't say just liquidity.
The yes or no questions.
Were any of them a failure of having too low capital levels?
So let's go to Silicon Valley Bank. You know, the issue that triggered the run initially was the presence of significant losses in their securities portfolio.
Yes.
And that is that is a capital issue.
So they had too
For the
low
amount of dollar
capital
index fell, gold should be flying.
requirements.
I do agree on
They
that.
weren't required to, as you know,
I
they
do
weren't
agree on
required
that.
to take that into account in their capital. But I think if you remember that what people were focusing on was these portfolio losses, and then what people weren't focusing on was the fact that they had in excess of 90% uninsured deposits, and that's what caused the run.
So would increasing capital requirements...
However, a
facilitate
closure
that
above
bank or
this level,
any of these other banks
these levels right there,
would that have
is a
stopped these banks
significant,
from failing?
significant confirmation.
That's an that's a hypothetical, unknowable question. I think it might have helped. I think it might have helped, but
A closure
How
below
much
here
then? Increasing
could also
by
be a
how
good
much?
confirmation. So it's all about body closures right now.
it's very hard to say. Very hard to say. I mean, clearly the main issue there was a failure of management to follow up, a failure of supervision to require them to follow up, and really the liquidity regulation was just not. It was not appropriate. We needed to have stronger regulation around liquidity and uninsured deposits.
Last year, you said the banking system is very strong, well-capitalized, highly liquid, does a much
So
better
far,
job
we're still in the game here.
understanding
We're still pushing.
that it runs and managing them. And just today, you said the banking sector...
This is a 1 hour candle. It looks quite good to me here. A closure
So
above
stand by
is a strong
things that you
formation
just
here.
said today,
Yes.
so, yep.
A
Last-
drop, a
last
base,
month, Vice
and
Chair
a
Barr
rally.
appeared before this committee, and he agreed with you and said overall banks have a strong capital and liquidity. Secretary Yellen has said similar things. But today, you know, even though you've all said that banks seem to have strong capital, you seem to lead us today by saying the bank's considering what increase would be appropriate of capital requirements. So has the board already decided that an increase will happen? They're just deciding what's the size of the increase for capital
No,
requirements?
what I meant to say, what I thought I said was that any increase above these levels would need to be shown to be justified.
So I understand, and you have a vote as whether or not what this proposal, you'll vote on whether or not, do you personally think that an increase is necessary at this time?
Do I think?
That an increase in capital requirements is necessary at this time?
Look, I'm going to react to whatever the proposal.
We're getting pushed down, and at the same time, we're holding strong. Gold's holding strong.
That's what I'll say.
Okay. You just also said that credit is tightening. Won't increasing capital requirements further tighten credit?
10 minutes for that closure.
Over time, I mean,
Only
the
1
thing
hour
about
here.
Capital requirements is if we put a proposal out this summer, let's say, it'll be quite a while before that proposal is, agreed and among the agencies and then voted on, and then it'll take some years to come into full effect. So I would think, whereas interest rates, for example, have immediate effects on financial conditions and then reasonably quick effects on economic activity, capital
There we go. Let's go.
are a much more sort of medium-term, longer-term thing.
So I'd like to move on to what the impacts on lending, raising capital requirements would have. According to an academic literature by the Basel Committee on Banking Supervision, a 1% point increase in capital requirements could potentially reduce annual GDP by up to 16 basis points, showing that higher capital requirements come at a cost and could have significant impact on the U.S. economy. I discussed this
We're preparing
with
here.
Vice Chair Barr last month, and expressed my concerns about what the impact of increased capital on the real economy, but he didn't answer the question directly. We just need to, we're hearing from all sorts of industry that these increased capital requirements at any level would have a further tightening on lending. And if that happens, and I'm hearing from everybody, if that happens, it's going to be a real disaster. So I think anything that the committee proposes, if you could come back and brief us on before it's finalized, we would appreciate that very much, sir.
Gentleman's time has expired. The gentleman from Missouri, Mr. Cleaver, is now recognized.
Thank you, Mr. Chairman. Welcome.
How much left for
Mr. Chairman.
confirmation? Well, we have
Thank you very much.
some, we're
This is
coming up
probably
significantly
economic
right now.
101, but a lot of people
We have
are
8
not
minutes till a 1 hour candle closure. The higher we close, the better it is.
misunderstanding 101 along with me. In May of this year, unemployment remained at 4% for the 16th consecutive month, and at 3.7%. This means that unemployment remained at or below 4% for the longest stretch in 50 years. In the U.S.,
This is what we want to
job
see.
Openings rate has fallen by more
Preferably
than
a higher high right now.
percentage points from its peak, while the unemployment rate has crept slightly lower. In other words, the job openings decline, but so does joblessness. And I'm wondering if there was any expectation that this would happen, this would occur.
There is an expectation that the level of the ratio of job openings to unemployed people has been in historic territory, all-time highs for a while now, in the last year or so. And there is an expectation that it will come down. There a while ago, there were 2 jobs for every unemployed person. Now we're
7
down to
minutes.
1.7, I believe, or 1.6. And that still speaks to a historically tight labor market, where their demand for labor still very substantially exceeds the supply of available workers. So we do expect as things, and that, by the way, that's a way that the labor market can become less tight without having unemployment go up.
I'm sure you're hearing this.
24
all
people
over,
till 10,000 members in our Discord.
as I am, and that is business people. I have a good friend who has a number of barbecue restaurants in Kansas City, and he is constantly telling me how difficult
We're coming closer with everything.
it is
Our
to
Discord,
find workers,
gold, the dollar.
to the point where he did something he thought I'd never do, put a sign out in front of his restaurants, job openings. And are there particular industries or sectors of the economy where we would expect this sentiment to be particularly true?
No, and that is right. That is, there's still a significant
buying.
labor shortage. The surveys at the aggregate level
She's looking at
show
the
that
charts.
it's not as bad as it was 2 years ago. So gradually, businesses are reporting that they're having better able to find workers. Workers are reporting that they're not quitting their jobs as much as they were. That's a really good sign of how tight a labor market is how much people feel free to quit their jobs voluntarily. So those things are all suggesting a gradual cooling and a gradually getting supply and demand back into alignment, but we're not there yet. We still have a significant excess of demand over supply.
Are we also finding that I know in Missouri,
5 more minutes.
in spite of the fact that there is some, jelly-like movement with the economy, people are still willing to go, in our community, still willing to go out and buy homes. I mean, we're not having difficulty in terms of people going out getting loans, even with the interest rates rising. If all of this continues, if the consumers are constantly paying whatever the interest rates might be, are we going to get stuck just continually going up?
Well, no, I don't think so. So in housing in particular, there is the housing sector nationally has flattened out and maybe ticked up a little bit, but at a much lower level from where it was, with rates as high as they are. So supply and demand there are getting back into alignment. And I do think that housing inflation is set to come down as we move forward. There's a particular way that the inflation is
4 minutes,
there, so that
1
you're
hour
really
closure.
looking at
Important candle.
you're waiting for leases to come due and roll over at much lower levels of increase. So we think housing inflation will be coming down significantly over the course of the rest of this year and next year.
Thank you, Mr. Chairman.
Gentleman's time has expired. The gentlewoman from California, Ms. Kim, is recognized.
Thank you for recognizing.
Hey Lorenzo, gold is indeed pushing higher, but it seems like gold creates a lot of liquidity along the way. It will be dangerous for us to long. So we're at the same time, we're building that as well to the upside here. Okay. I do agree, but I think a closure above this high, and especially above this, above the 1938, 1939, will be a very strong confirmation here. So it all depends on how we close the not lower time frame closures, but the higher time frame, like the 30-minute, 1 hour. Like these candles are the most important here. So just sit back, be patient. for now.
Specific analysis
And we'll get into a position if you break here.
So we can determine the impact of this warrantless regulatory.
We will not enter
actions
right
on
away if it
businesses
closes,
and
by the way. One more thing, we don't enter right away. We wait for that lower wick getting created, and then we enter once we flip as well to reduce as many fake outs as possible. Like, there is a chance that we can at least reduce it with 75%. Does it still occur? It does sometimes still occur, of course, but yeah, we'll find out there. I like how gold is pushing here.
But somewhere in the middle.
Thank you. There are estimated about 1.5 trillion of commercial real estate loans that are maturing in the next 3 years. And declining demand and the prevalence of work-from-home policies are putting a strain on commercial real estate market. The bulk of commercial real estate loans are held by smaller and regional banks. So is the Fed thinking about policies that could provide time for commercial real estate loans to be refinanced? And could an increase in capital requirements reduce liquidity in the commercial real estate loan market?
We're very focused on the commercial real estate situation. You're right, of course, that a good portion of the commercial real estate loans are held in smaller banks. And supervisors are very much engaged with those banks, and it's particularly banks that have a high concentration. That's what we look for among the smaller banks, and there are some of those, but there's a playbook for working your way, working your way out of these loans, and it's particularly in the office sector where work from home is still a pretty material factor in some areas, as you know.
Thank you. So the next question has to do with the board process and procedures.
Because DJ looks good for sales.
What are those procedures
We'll have
that
Luca in a
govern
second.
consideration and potential adoption of matters like the proposals that Vice Chair Barr is about to present to the board?
So on regulation, as opposed to supervision, on regulation, the Board of Governors votes on regulatory proposals, and it's a majority vote. We now have 6 voters, so when there is a proposal, it will be briefed carefully, and then we will have we'll have a meeting, or it can be done actually virtually, and probably will be that way, as most of our meetings are, and then we have a vote. On supervision, it's different. Most supervisory matters are really under the authority of the Vice Chair for Supervision under the law. So most of them don't have...
I think GJ cells are coming closer indeed.
What percentage of the governors must vote in favor?
Majority.
The majority of them? Okay. The California governor, prior to the depositor bailout for SVB, reportedly identified that he had...
Okay, closure has been completed here. We didn't break above these highs here, but what we want to see now, you want to see a retest of this low and continue here.
March 12, when the bailout was announced, issued his own statement praising that action. There have also been reports that the governor and his wife, with respect to their business and perhaps other interests,
the daily flip is 1936.
Had depositor interest in SVB. So when the Reserve
Definitely looking for buys above there.
Board, the FDIC board,
that's what we're waiting for.
Secretary Yellen, in consultation with the president, recommended invoking the systemic risk exception for SVB, and then decided to provide blanket insurance even on uninsured balances. Did the Fed or any others, to your knowledge, perform any conflict of interest due diligence?
No, I mean, we were in an emergency situation on Monday morning. There was going to be, and there was a run on banks that looked, that
so
had
looking
high
back, do you think there was any?
We carried out our duties, and I'm actually pretty sure we did the right thing.
And you don't think there was any conflict of interest, even looking back?
I have nothing. I have absolutely no knowledge on that.
Okay. Well, thank you. Thanks for being here. I yield back the balance of my time.
Gentlelady yields back. The gentleman from Texas, Mr. Gonzalez, is recognized.
Thank you, Mr. Chairman and Ranking Member. Thank you, Chairman, for being here with us this morning. The June Federal Open Market Committee report indicates inflation
Bitcoin
in the US
keeps piling up here.
Continue to ease but remain elevated.
Wow.
In response to the FOMC that has the proposed interest rate increases up until June 14th, recommendations to pause interest rate hikes for the first time this year, research has shown that the effects of monetary policy decisions, like raising interest rates, can take, on average, 42 months to be realized fully in the United States. meaning we may not fully understand the effects of this first increase in rates of March 2022 until next fall. With that in mind, how have our recent tightened monetary policies impacted the strength of the U.S. dollar and how it is valued globally?
Dollar close above the 108,
There's a
101.87.
lot of uncertainty around how long it takes monetary policy.
So keep a very close eye on this dollar right now.
Agreement on
Okay.
42 months or
We close a body above at least these particular lows here. So
So you're asking how it would affect
if that's the case,
So
and we're not pushing down, breaking down below here,
The Treasury Department.
pay very close attention to gold right now. Gold is now filling up that gap.
And the stewardship.
It has filled up the gap of that previous body.
Actually comment on that. We don't.
If you want to continue, you want to do it now.
level. It's just another, to us, it's a financial condition. A stronger dollar means certain things and a weaker dollar means certain other things. But
It continues to be a concern here in this committee. Also, Chairman, as you're aware, the Federal Reserve's core mission is to keep employment up and inflation down. Although I understand the calls for climate-related financial risk management from my colleagues, we should be focusing on the economic state of our country. The credit of the U.S. dollar is at jeopardy, and as you know, we've had global pressure recently, and we need to be sending a clear message that the world can rely on the full faith and credit of the United States dollar. We should be focusing on mitigating the calls to reduce dependency of the U.S. dollar. Monetary policy changes implemented in the U.S. are likely to cause a ripple effect throughout the global economy. With that said, would you agree that monetary policies to directly address climate change should be made by Congress and not the Federal Reserve, and implementing monetary policies and supervisory tools to exclude energy leaders from capital and financial institutions would have a grave impact on local, state, federal, and even global economies?
a strong agreement around the fact that we have quite a narrow role in climate change, and really the important decisions about climate change need to be made by elected people, not by the Fed.
Thank you, and I yield back.
Gentleman yields back. The gentleman from Florida, Mr. Donalds, is recognized.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. Really appreciate you being here. Look, I got to say, first of all, it was good to hear from the other side of the aisle that the Federal Reserve should not even be engaging in using its tools with respect to climate change or climate mitigation or whatever the case might be. The Fed, you guys have a big enough job as is. Adding anything like that to your job, I think will be wholly detrimental to the American economy. So I, for one, this morning am glad to hear that coming from the other side of the aisle. You've had a couple questions already on capital, bank capital, et cetera. Look, some of the current views are that continuous raises of bank capital will increase costs to our economy anywhere from $50 to $200 billion. What's your view of the current desire or mode of Vice Chair Barr to fully implement the Basel III capital standards?
Well, I think that's the next thing. Vice Chair Quarles was working on that. It didn't get completed for various reasons, but I think that's an international capital standard that we should go ahead and complete. As to the right level of capital, that's a discussion.
Gold's pushing here. Filled up the imbalance. Buyers coming in right now.
Kind of concerned about the fact
The yen
that
also.
It seems like
GJ will probably come down a little bit more as well. So I'm starting to look at GJ as well right now in a second.
Too much for European banks, and that they're starting to receive from what was, I assume, kind of a handshake agreement in years gone by.
Yeah, I'm not hearing that exactly. We'll be watching that carefully, though.
Okay. Overall, just with respect to capital, let's take a step back. Obviously, since 2008, 2009, we have, in my view, aggressively gone through this process of increasing capital standards and capital requirements on a Tier 1 capital for banks. In retrospect, do you think that's been a net positive to the overall banking environment, or do you believe it's been a negative to the overall banking environment?
I think it's been a net positive, and as I pointed out earlier, U.S. banks have competed very, very successfully through this period, despite what were pretty significant capital increases that we put in a few years back. So it really has led to a very strong, and also made it well through the pandemic period, I thought, and I think that was a pretty good test. So even though the government did do a lot to support the economy, still, I think that those capital hikes that we made in in the last cycle come through looking pretty good.
Do you guys at the Fed, do you have a view of, I say you guys because I know you're the chairman, but there's other members as well. Do you have a view of the concern about community banking in the United States, or a lack thereof of community banking? It has been shrinking quite significantly over the past 10 to 12 years.
Very, very much so. It's a focus for us. We understand the importance of community banks, that they provide a different service and a really important service to smaller businesses and communities. And community banks have been consolidating for 30 years now. So it's really a secular trend as people have moved to bigger cities and things like that. But we don't want to do anything to move that along. We think that the world's not a better place with fewer community banks, and we try to keep that in mind in all of the regulatory and supervisory things that we do.
Do you think that federal regulatory policy, in part from Congress, has led to a supercharged?
Let's see how we close this 50-minute candle. If the yen breaks above and closes above here, might go short on GJ.
A factor, but I do think there have been important demographic factors as well. And also having interstate banking. Interstate banking only became legal quite recently, and that also has led to consolidation. You can look back though, again, look back 30 plus years, and you've seen a very steady decline. So I think there are demographic and other factors driving it, but regulation can fall as a fixed cost, which means that institutions need to be bigger, and I think that's probably part of the story.
Look, I don't disagree with your conclusion. I'm just concerned about the trajectory. I think just having larger financial institutions, larger banks overall, with a diminishing smaller community bank infrastructure is detrimental to lending to small businesses, mom and pop businesses. It also could be parochial. I started my career in community banking, so I saw a heartfelt situation. Last question, running out of time. The SEC has proposed a rule that would, among other things, require banks to segregate client cash held in custody, upending custody bank balance sheets, and by extension, the bank custody model. Are you guys at the Fed concerned about this proposed rule from the SEC?
The gentleman's time has expired. The chairman can
I'll respond to
in
that.
writing.
Okay, fair enough. Thank you, Mr. Chairman.
The gentleman from New York, Mr. Torres, is now recognized.
Thank you, Mr. Chair, and thank you, Chairman Powell. As you know, the U.S. has foreign adversaries, particularly the CCP, that seem intent on de-dollarization. How seriously should the threat of de-dollarization be taken, in your view?
Well, the status of the United States, of the dollar as the world's reserve currency, is a very important thing to us. I think the reason we have that status is largely due to our great democratic institutions, the rule of law, and the fact that we have, generally speaking, had strong levels of price stability. And I think that the dollar will remain the reserve currency as long as those things are in place.
Well, I want to explore that answer, because commentators often speak of the dollar as the world's reserve currency as the cause of America's economic dominance. Do you think of it as the cause of America's economic dominance or as a consequence of it?
To me, it's more of a consequence.
Okay, dollar pushing.
Also, it just there tends to be an equilibrium where one currency becomes the accepted global standard, and that has been the dollar for some time, and I expect that it will be.
No closure above yet.
Continue to be.
Unfortunately, we'd love to have seen closure above 935 here and push through. If we close below it,
do you view these mandates as equally binding upon the Fed, or does one supersede the other?
They are perfectly.
we might flip it. We're still
And I'm curious to
operating
know
within
what
this
it
range.
means in practice to have a 2% inflation target. The latest pause notwithstanding, does it mean the Federal Reserve will continue raising interest rates until the 2% target is reached, even if doing so comes at the expense of maximum employment as well as financial stability?
No, it doesn't mean that. It does not. So the way we think about it is, most of the time, the two goals are aligned in the sense that if you're achieving one, you're achieving the other, and if you're a little bit off, the other one, they move in the same direction. Today's situation is unusual in that we are overachieving, in effect, the maximum employment goal, but we are far from achieving the inflation goal. So in our system, we have a constitutional document, and what it says is that when that's the case, you look at how far you are from the goal, and you look at the speed with which you would move back to the goal. And so that would tell you today that we should focus heavily on inflation. But as it becomes closer as you know, as the two things become more aligned, then they go back into perfect equality under the law.
So the Fed engages in a delicate balancing act between employment and inflation.
Yes.
To what extent do you factor in financial stability, safety, and soundness when raising interest rates?
So you're right. We do have a financial stability mandate, but we try to.
Well, you have a financial stability mandate with respect to your role as a bank regulator. But when it comes to
also just generally, we're the lender of last resort. Central banks were originally created to support the financial system in times of stress and to make sure that you don't get into times of stress. So I would say that. Sorry, what was your question before that? It was
to what extent do you factor in safety and soundness when setting interest rates?
Sorry. So we really try hard to use our financial stability tools for financial stability purposes and our monetary policy tools for monetary purposes. The reality on the ground is much messier than that. They're very much entangled, and one affects the other. So the separation is not at all perfect. But we do think of these as separate things with separate tools.
Do you think that the Silicon Valley bank failure revealed a deeper tension between the safety and soundness mandate of the Fed as a bank regulator and the mandate of the Fed as a administrator of monetary policy? Or?
I would say no, and I'll tell you why. Interest rate risk is, one of the most basic banking risks. We supervise for it. Overwhelmingly, U.S. banks did manage their interest rate risk. Silicon Valley Bank didn't, and even though we were, the supervisors were pointing that out to them, they just didn't take, the bank didn't take action quickly enough. So I would have thought that you can say that it was
Japanese yen, 50 minutes. You wanted to see the closure above this level.
But it was management that
1 minute left
against those losses and failed to hold appropriate liquidity.
In the pre-COVID world, we had the best of both worlds: low unemployment, low inflation for decades. Do you
Gold's
believe
still
that
around the same.
we could return to that best of both worlds, or are high interest rates a new normal in the American economy?
So we will return to 2% inflation and maximum employment. What will be the level of interest rates there? That's a really good question. And
do you suspect it's going to settle at a higher level than we've known historically?
I think it's really hard to know. It's a great question. We talk about this a lot. The people who argue that they will move it back down just point to the fact that it was really global factors that drove rates down in the first place. Maybe the truth is somewhere in the middle.
Gentleman's time has expired. The gentleman from Nebraska, Mr. Flood, is recognized.
Thank you, Mr. Chairman. Chairman Powell, I'd like to discuss the continued efforts to unwind years and years of quantitative easing and what it's done to our Federal Reserve balance sheet. If you take a look at the size of the Federal Reserve's balance sheet since the 2008 financial crisis, we've seen an alarming increase from around $800 million to today's $8.3 trillion in assets.
Japanese yen close below that level.
Did start the work of winding down
so be a little bit patient with GJ here.
Offload roughly 700 billion assets between the beginning of your time as Federal Reserve Chair and August of 2019. The problem was, shortly after your efforts began, we had another major economic shock, the COVID-19 pandemic, that caused the Fed to once again return to quantitative easing as a form of economic relief. Pretty soon, the Federal Reserve's balance sheet had increased another $4 trillion in size. That's how we made it to the balance sheet level that we are at today. I understand you have started working to shed some of the Federal Reserve's balance sheet, and I appreciate the work. That being said, the scale involved here, to me, is startling. My concern, Chairman Powell, is that efforts to shed assets from the Fed's balance sheet have never been anywhere as quick as efforts to build it back up. Our economic cycle does go through recessions from time to time. It's not always boom, but some bust too. If we continue a pattern of rapidly building up the Federal Reserve's balance sheet in bad times and slowly shedding assets,
we need that push. We need that volume increase here.
The balance sheet grows significantly over time. Chairman Powell, is this a concern of yours? And to pair with that question, long term, how can we avoid an environment where any effort to unwind the Federal Reserve's balance sheet is undone anytime there's an economic shock?
It is a concern, and that's why we are. This time the balance sheet roll-off is much faster than it was back in the first episode. We also know more. We hadn't grown our balance sheet.
Bitcoin up to 29,695. Yes,
So we are
incredible.
moving back.
I'm in a trade since 26,740.
Framework. By the way, we won't go back to a framework where we were.
We have our live stream in Discord or event soon
The administrative
on a Friday. You want to be part of that, so join our Discord, join our event, get into our VIP. You can join it for free. You just have to follow the instructions here.
I'm very conscious of that.
Chairman Powell, do you have an optimal Fed target?
We need
for
that dollar
size of
push
what the balance sheet should look
further
like?
down right now, or again at closure above 90.35. We need that final push here, and we need that volume. So we're gonna wait
The number, but the idea is that
around 12 more minutes right now to see how we close this 30-minute candle. If there is any chance of volume coming into the market, if that's the case, we're gonna stay on until we're gonna break out of these areas, either up or down. I don't care. But it's about the volume right now. The volume is the most important part. That will give us a trade opportunity.
reserves were scarce, even though we didn't see it coming, and we then had to, put more reserves into the system at a time when we didn't want to be doing that. So I think you want to have a level where we have ample reserves plus a buffer, and that'll be a % of GDP that we get down to, and we're moving in that direction pretty smartly.
Chairman Powell, realistically, how quickly can the Federal Reserve unwind its balance sheet? What's the threshold beyond which an asset sell-off by the Federal Reserve would disrupt our markets?
So we don't sell assets. What we do is we allow them to mature and passively roll off. And that's what we're doing to the tune of about $1 trillion a year. And we're in the middle of that process. Now we will, it's an empirical question. You're going to find a level that is still ample plus a bit of a buffer. And that's how we're thinking about it.
Thank you, Mr. Chairman. I would just reiterate my concern on this issue. I fear that having the Federal Reserve backstop so much of our economy through the holding of treasuries and mortgage-backed securities is not sustainable long-term. Thank you, Chairman. I yield back.
Gentleman yields. The gentleman from New York, Mr. Horsford, or Nevada, Mr. Horsford is recognized.
I thank the chair and the ranking member for holding this important hearing, and thank you, Chair Powell, for appearing before the committee today. Before I begin, I'd like to ask permission to enter into the record editorial by the Las Vegas Sun entitled "Economy Infrastructure Thrive When Dems Have the Reins," dated June 16, 2023.
Without objection.
During this time of increased economic uncertainty, it is more important than ever that the Federal Reserve fulfills its dual mission of maximizing
9,987.
and supporting price stability.
13 people.
There is no doubt that it is difficult, and the needle that has to be threaded is very specific. However, the human cost is simply too great for us to get this wrong. Sometimes we need to be reminded that there are real people behind the economic data, and that the actions taken by both Congress and the Fed have real consequences for everyday Americans. Everyday Americans who want to know that myself and my colleagues are dedicated to creating.
We're going to do a giveaway before we end the stream as well.
Which is why I was pleased that
so if you're still here, thank you for your patience.
Decided to pause your interest rate hikes and take stock of the overall economic picture. Now, don't get me wrong, there's certainly more work ahead of us. But with 13 million jobs
Buyers
added
still
since
stepping in for
President
gold
Biden
too.
took office, we should be rooting for America to succeed and not to fail. The strength of the labor market continues despite the multiple concurrent shocks that continue.
We're still above it. We're still above that level. It's still looking good.
Our economy remains resilient thanks to the historic
Buyers are still stepping in.
that were included in the legislation passed last Congress and signed into law by President Biden. These beneficiaries of these investments were the people, the middle class, not special interest. The bipartisan infrastructure law is creating construction jobs and projects that will help ease supply chain challenges and ensure safer transportation for everyone. President Biden and congressional Democrats are investing in technology that will define the 21st century, components to generate solar and wind energy, semiconductors and electric vehicles that will all be made here in America. Just last week, Treasury Secretary Yellen was before this committee and described how the transformational investments from the Inflation Reduction Act are ushering in a renaissance of domestic manufacturing. These are good-paying jobs, union jobs, that are expanding our production capacity here at home while reducing our reliance on goods imported from abroad. As I indicated in the editorial by my hometown newspaper, the Las Vegas Sun, remarks that annual investments in manufacturing construction has more than doubled its pre-pandemic levels.
Anti-spam is on. You can only do twice. Don't do it more than 2 times. To become part of our giveaway right here.
Census Bureau
Keyword is
estimates
limitless
that
in the
just
chat.
2 years, private manufacturing construction increased almost tenfold. So if we want to rebuild the American middle class, we must do so from the middle out and by investing in modern infrastructure and modern manufacturing facilities. But this does not mean that everything is improving equally. I've heard time and again from my constituents about the cost of housing being one of their biggest pain points. The Monetary Policy Report points out that housing services prices have
5 more people for 10,000. We're going to reach it today.
Over the 12-month period ending in April, and in my district, it's even worse. So, Chair Powell, at a time where it has become increasingly difficult for working Nevadans to purchase a
If you
home,
spam more than
I
2
worry
times,
that
you
rising
are
mortgage rates will
removed.
put working
So you can only do
families
twice.
even
That's
further
it.
behind on accessing
It's the
the wealth and
anti-spam
equity
function
that
here.
a house
If you want to
provides.
join a giveaway,
While higher rates have
2 times is
cooled
enough. That's
some
it.
housing markets across the country, what do you see as the biggest remaining upward pressure on housing services, and what can we do in Congress to incentivize new home starts to hopefully moderate the imbalance between supply and demand in the housing market?
I think you're talking about longer run.
Okay, you guys are all in. That's it. Thank you.
Factors.
We're going to do giveaway in like 5 minutes.
There has been for some time a
You
shortage.
don't have to type in limitless anymore. Otherwise, you get removed automatically.
It's harder to get workers, and in the pandemic, it had been harder to get materials and things like that. So there's certainly a need for more housing. I think during the pandemic, you had people wanting to live in houses rather than downtown in apartments because of COVID. You had low
Okay,
rates.
6 more minutes till that closure. This is the final closure. We're going to wait for and see if there's any volume coming in.
Price increases for housing.
Then we do our giveaway.
It's flattened out a lot as we've raised rates. And
Gentleman's time has expired. The gentleman from New York, Mr. Lawler.
Thank you, Mr. Chairman. Chairman Powell, you, the Fed's Vice Chairman for Supervision, and many others have indicated that the banking system is well capitalized. Bank capitalization remained robust during the COVID shock and related shutdowns of economic activity and in severe Fed testing, stress testing. Nonetheless, the Vice Chair for Supervision wants to increase capital and other requirements on financial institutions. This will have substantial economic effects that will begin immediately while you are still focusing on bringing inflation back to the Fed's 2% target. Excessively high capital requirements will constrain credit provision to the economy,
5 minutes here.
jobs, incomes, opportunities, and living standards. As my colleague Mr. Garbarino pointed out, a 1% increase in capital requirements could potentially reduce GDP by up to 16 basis points based on the Basel Committee literature. On January 21st, 2021, 30-year fixed-rate mortgages had an interest rate of 2.77%. Now, for the same loans, individuals are looking at a 6.69% interest rate for a 30-year fixed-rate mortgage. For the median home, valued at $436,800, the difference from less than 2.5 years ago to now equates to over $300,000 more over the course of the loan. For the median household making around $71,000 a year, that extra $10,000 a year out of pocket in mortgage costs is
10,000 a year, huh?
Some areas like my district are even harder hit due to the high cost of living and the lack of housing. Combine that with inflation at or above 4%.
Thank you for the support. 10,000 members in Discord. Amazing.
A real toll on the average American family, including
That's big
in
stuff.
the Hudson Valley. Now, further decreasing the availability of credit
4 minutes till
households
closure.
and
Let's look at gold
businesses
first.
across the country would only
And then we do the giveaway and we
likely
talk.
worsen this crisis. So, Chairman, do you agree that excessively high capital levels constrain banks' lending capacity with spillover effects on jobs and living standards for Americans, and effects would begin immediately, independent of any proposed phase in timing?
I do think that, as I mentioned earlier, there is a trade-off between safety and soundness and availability of capital, and you want to get that balance right. That's
But respectfully, you said you have testified that there was more than enough capital in these banks. So where are we unsafe and unsound that we would require more capital requirements?
Well, as I mentioned, that's the question we're going to be asking as we review the proposals when they do come forward. We don't have a proposal in front of us at this point, and I think as I mentioned, any increase in the capital for the large banks would need to be justified. I don't know that there will be much in the way of capital increases proposed for banks other than the very large banks, but we'll have to see.
So you
Okay,
don't
3 more
believe
minutes, 2.5 minutes here.
regional and community
We need to
banks
close above
will
the
face
1930.
same,
We have to.
requirements?
Very different requirements, I would think, as they do now.
But you're not looking to increase the requirements on them.
We'll have to see what the proposals turn out to be. Honestly, they're still to some extent in motion, and once they're out, we can have lots of conversations about the specifics. But until they are, it's tough to do that.
And you'll commit to providing this committee with all such analysis before any proposals come out?
I think there will be a proposal that comes to the board sometime this summer, and the board will vote on that, and we'll obviously share.
Okay, 1 minute left, 2 minutes left here. This is it. We're not going to see any volatility coming here. I can already see it right now. We're going to wait for the 30-minute closure that we have right now in 1 minute and 45 seconds. I'm going to put my little my song on here because we have to celebrate something, guys. It's actually amazing. Thank you for the support. We're going to talk about gold real quick here. But 10,000 members in our Discord. Absolutely fantastic. We've been working very hard to build up our community from zero. Okay. We are full. We are packed. We are so active. It's absolutely incredible. So I thank you. That's the deepest of my heart. I truly, truly appreciate it. It was a big milestone. We're going to do something big here. Me and my team are going to discuss what it will be. For now, we just have a regular giveaway here. We're going to come up with something. Absolutely. Tomorrow. So you want to be part of that. You want to be there. Same for gold, by the way. In regards to gold right now, we have our closure in 1 minute. Let's quickly go over gold. And let's quickly go over GJ. So I think then it's clear also in that matter what we're looking for here. Very important. 40 seconds for the 30-minute closure. At least above the 1930. So let's patiently wait real quick until this is done. I do not expect that much volume anymore. To be honest, like based on what I currently see right now, we have been operating within that range. We never saw our closure below. Otherwise, we would have sold straight away. If we saw a closure above, we would have bought straight away. We have been literally operating within that range right now. Of course, due to the news. These days are part of the game. Therefore, tomorrow we're going to see definitely something happening here. And I'm personally leaning still towards the upside. The way we're moving, the way we're operating here, I'm looking for continuation here. I'm looking to take it out. If that happens tomorrow, it happens tomorrow. But we have closed above it. This is a good sign here. But again, the dollar is not looking particularly strong yet, even though we have been pushing up a little bit. For GJ, okay, we have the Japanese yen basket here. The Japanese yen basket needs to close above the 7,002 or 7,027. Okay, we really need to close there in order for GJ to break and close below the 180 in that sense here. Look at these equal lows right now. We have been coming up. So what did we do? We consolidated, we expanded, we retraced. Confirmation, came down, came up, equal lows. We want to take out these lows, okay? So looking for shorts is great, but the best way to wait for a potential short for GJ is when the Japanese yen basket closes above this level, okay? It is important that you see that we're closing above it right now. You see that we're facing resistance right here. Okay, support, 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 resistance. You want to close above it. Then we can look for the continuation. And that will be good for GJ at that moment here. For gold, if we break above 9035.31, 9036, let's say the daily high of 9036, okay? And we flip bullish, looking for longs right away. Especially when you have that closure on the 1 hour or 30 minute. Looking for longs from there. And strong buys above the 1939 if you close above it as well. Okay? So that's what I'm looking for. Thank you so much. Let's do our giveaway for now. And let's see what we have here. Okay, we have our guys in Limitless Chat already. That's amazing. We're going to pick it right now. We're going to roll it right now. Let's do it. Boom. Dennis Chang, my man, send me a message on Discord. You're either going to get access to our V3 right now, our private Discord, our private community within this Discord, or $100. Send me a message right here on Discord. But make sure you are here right now. Otherwise, we do it again. Like yesterday, I want to see you in the chat right now. Otherwise, we're going to roll it again. Okay? Let's see what we have here. I want to make sure that this person is actually here. Okay, I think that's the most important part for us in order to move forward. Okay, he's here. Amazing. Congratulations. Thank you, my man. Send me a message and we're going to get it sorted. I'm very, very happy to have you guys all here. Tomorrow I'm going to be back, same time. Okay? Keep in mind that there are two things. Okay, number one, we have our live crypto mastermind coming up on a Friday. Crypto is absolutely exploding. We have not even talked about crypto here, but we are in a decent long position since 26,740. Stop loss was at 26,628. It didn't get hit. We are all the way up here, and we expect a lot more movement happening for Bitcoin right now as well. So you want to be part of our event? I created a course for free that you can literally join if you join our event here. We have our wins set up. We're going to fill it up with a bunch of wins from our community. I'm going to prepare you for the next leg up here. And people that are saying that crypto is dead, well, yeah, no comment. Then another layer. We have our V3 as well. We're going to start with our private live streams as well here. We have our courses in there. Everything, $97 lifetime access right there. Okay. You can join by going to our Discord, get V3 access. $97 lifetime access is worth over $5,000. You want to be part of that. You want to see it. You want to also watch the video in the announcement section of what it is, what we do. Private live streams are starting next week again. We have already done 120 live streams before. We're going to do it again starting next week. Yeah, who's in the V3 right now? Let me know in the chat right here who we have right now. Who's in the V3 at the moment? I just want to see if the guys are here still watching us, because they're always supporting us here. They're always supporting us. Let's see what we have. That's beautiful. That's beautiful. Amazing. All right. Join our Discord. And if not, just join our Limitless Lounge. People are going live here all the time as well. We are full. We're growing. What we do usually after the live stream is we're heading into the Limitless Lounge. If something happens, we are there to discuss it with our community. So this is for everyone. You can join. Anyone can join this. Right there, the Limitless Lounge. We hang out. We talk about the setups if something happens right now after the stream. Okay? 10,000 members. I highly appreciate it. Thank you so much. I'm going to be back tomorrow. Wait for more volume on gold. And no news, so we're going to see something happening here. Okay? Appreciate all of you guys. Thank you so much. Enjoyed the stream here. Tomorrow, new day, new chances for our gold setup. All right? See you tomorrow. Bye-bye. Ciao, ciao.